Hello everyone, welcome to ZaranTech's Expert Workday Payroll Training. Master managing and optimizing payroll across your organization with our real-world knowledge. First, we cover configuring pay groups, payroll calculations, and payment elections to match your unique compensation and reimbursement needs. Then, learn to build custom reports to analyze payroll costs and identify opportunities. We also dive into setting up off-cycle payments, managing time-off accruals, and automating complex rules. ZaranTech's Workday Payroll training delivers the practical skills and knowledge needed to maximize Workday's payroll capabilities, control costs, enable valuable insights, and drive payroll efficiency with the leaders in Workday. But before we begin, please subscribe to our YouTube channel and hit the bell icon to receive regular updates from us. Agenda 1. Set up the Payroll Processing Framework. 2. Periodic schedule structure. 3. Run categories. 4. Defining payment election rules. 5. Pay groups. 6. Defining earnings and deductions. 7. Information required to define earnings and deductions. 8. Explore a bonus earning. 9. Pay component groups. 10. Criteria. 11. Calculation details. 12. Compensation elements. 13. Time earnings. 14. Benefit plans. 15. Pay component security groups. 16. Costing. 17. Limits. 18. ROE Canada. Let's dive into the video now.
Today we will get start with processing framework for payroll processing. So now we are going into it. What Workday payroll is, what Workday payroll advantages are, why more and more companies or why more and more customers they are opting for Workday payroll, what Workday payroll brings to the table when it compares to a legacy payroll or any database ERP system like PeopleSoft or SAP. And what are the primary advantages? What Workday payroll gives us in terms of processing power, then power of one, because all the modules are sitting on one platform and there is absolutely no delay. Like there is no need to wait for any batch process to run, which means that not typically every customer will go for full-fledged Workday platform, which means that you will see in field, you will see the hybrid kind of a setup as well, which means that you will come across where benefit is outsourced or time and attendance is outsourced. But typically, whenever Workday is implemented, you will see bare minimum core HCM and payroll, they are on Workday. When I'm saying core HCM, all the employee related data, compensation data, that will be in Workday, and then you will see the payroll. Now, based on my experience, wherever the customer go and they implemented Workday payroll, more or less taken benefit as an exception. Most of the functional modules they are in Workday. But as I said, that is not a set in stone rule. You will see companies or customer, they have benefit outsourced, which means that in that case, we are expecting inbound and outbound integration coming and going out of Workday to the benefit provider. Similarly, if leave processing or leave administration is not happening in-house, then we will typically see the inbound transaction coming into Workday to put employee on leave so that their HR status will be maintained, and accordingly, we will have their payroll process. Same is the case with Workday time tracking, because Workday time tracking is the newest product. So they are evaluate, the product is evolving. So with every passing release, they are bringing more and more functionality to it. But still, if you ask me, when it comes to retail industries or when it comes to manufacturing, still Workday time tracking is not yet there. So the customers in these industries, you will see they will have either a Kronos or ADP, E-time or any other time and attendance system, which means that with such arrangement, we are expecting inbound coming into Workday to bring the time punches or time blocks. reported time blocks and calculated time blocks in the system so that payroll can calculate and pay that. So this is just, sidebar conversation, just to give you an overview that, what kind of a landscape you guys can expect when you are going on project or when you are starting, supporting customer related to payroll. The payment election rule is nothing but a direct deposit. All other ERPs, we are familiar with the terminology called direct deposit. In Workday world, we call that as payment election. So we will define a payment election rule. We will define, or we will tell the system that what rules we want to configure, so that what will be the rules when employee is going and they are electing their direct deposit. Do we want employee to elect 4 account to distribute their salary, or do we want to keep a cap on 2 account, or we want to give them more than 4? Do we want to give them an option of putting percentage or amount, or we want to give them an option of just amount, or a mix of both? Or again, we want to give them an option of selecting their half of amount as going into direct deposit versus half of their amount is going out as a physical check, or we don't want that mix and match. If they are selecting a direct deposit, we don't want to present them an option of receiving a physical check. If they don't want, because there are few states in United States, there is a statutory requirement that you cannot force employee to go for direct deposit. If they want, they can go for check. But as we are now, living in a digital world, digital age, and more with pandemic, more and more system and more companies, they are striving for digital solution. They are trying to convince their employees to move away from physical check and opt for direct deposit. There is definitely an advantage of moving away, or convince employee to move away from check, because if employee opt for a physical check, which means that payroll team need to process, need to print, and need to mail that check. So there is a time delay, plus there is a cost involved. Even if they are outsourcing those services to third-party vendor will come back and charge based on how many physical check they are processing. So it is always advantageous in terms of organization to have more direct deposit as compared to physical checks. So with that thought, now let's get into crux of this topic, that is set up payroll processing framework. So what we, typically we called it when, what, and who, which means that when we want to process, what we want to process, and who we want to process. As it says, when, what, who. When is when we want to process, which means that what will be the schedule for processing payroll. Whenever it comes to payroll, we cannot just process payroll ad hoc. Like, one fine day I want to process payroll. No, absolutely not. We need to stick by calendar. Now that when we are sticking by calendar, there is a possibility that some companies, they want to process payroll on a weekly basis, or a bi-weekly basis, or semi-monthly. When we are talking about United States, these are the 3 most commonly used payroll frequencies when we are processing payroll. Same holds good for Canada, but when it comes to European country, majority of European countries, they process payroll on a monthly basis. Same is the case in Asia Pacific and some part of Latin. So again, we are focusing on US and Canada payroll. So we will see that either it is going to get weekly processed, or a bi-weekly process, or a semi-monthly. Most commonly or most popular is bi-weekly. Now, there are weekly payrolls, and who normally, you will expect to be processed on weekly. Non-exempt population. Non-exempt population or hourly population. The reason why more companies, are the companies who are processing weekly payroll, they have non-exempt or hourly population on it. The reason is simple, because they are not highly compensated worker. So it is easy, or it is beneficial for them to get the paycheck on a week-to-week basis. Similarly, they are either a seasonal worker, or they are those are the job profiles which have a changeover pretty fast. So they are changing job frequently, so they cannot just wait to get their final check for two weeks to get their final check. It is always good for them to get on a weekly basis. But again, more frequently we process a payroll, there is an overhead, there is a lot of work on a payroll team to do it. So there need to be a balance between not to overkill your payroll team, at the same time keep your employees happy, and not to have a processing cost too much while running a payroll. So as I said, mostly you will see that there is a biweekly payroll. That is what I term as when, because that is what we are telling system that when we want to process a payroll. Now, what you expect on a period schedule? As it said, it is a calendar. So you can expect period start date on it, you can expect period end date on it, and you can expect payment date on it. Bare minimum, we can expect these three. At the same time, we can expect the frequency, because based on frequency, we will have a period start and period end date. If it's a weekly, then it is Monday to Sunday every week. If it is a bi-weekly, then it will be Monday to Sunday and for 2 weeks. And then we will have a payment date. Depends on, do we want to pay in arrear or do we want to pay current? So again, different companies do differently. So based on that, there will be a payment date. And then there will be a forward accrual. So when we talk, or when we get into period schedule specifically, I will talk about forward accrual. So just hold this term forward accrual for a time being. Now, second block is what, and what is represented by run category. So run category, if I want to explain, I will say run category is an envelope, or I would say run category is a funnel. So whatever, we are having employees, the companies, hiring employees, there are fixed term employees. Now, based on for whom we are processing payroll, definitely we want to process payroll for every active employee in an organization. We want to process payroll for employee who are on paid leave of absence, and we want to process employee who are who are terminated, but they have a severance package with the company. So at a high level, we definitely want these three categories of employee to be processed. But other than that, you have all the historical terminated employees sitting in your Workday. Do you want to process them? No, we don't want to, because they are not having any earnings. They are not having any deduction. Why we want to bring them into our payroll engine, and why we want to calculate them? Now, who controls that? That who will be picked up and get processed on my payroll? Run category is the configuration item which controls that which employee will get picked up and be a part of payroll process. So run category is important, which is as I said, it's a big funnel, or it's a funneling configuration which funnels who are eligible to get processed on the payroll. Other than that, run category is a place where we define that the payroll what we are running is require any supplemental taxation, or is it a regular payroll? We don't need a supplemental taxation. And we define that what will be my gross accumulator, what will be my net accumulator, what other pay component or pay component group. So when I'm using work pay component in Workday payroll terminology, it is nothing but it's a earning deduction and taxes. In Workday world, the pay component, which means that the element which is getting paid or which is getting deducted are called as pay component, and grouping of pay component is pay component group. Like all the pre-tax deductions, I can group them together into one bucket, and I call that bucket as a pre-tax deduction. So individual taxes like federal withholding, state withholding, local withholding, state unemployment, federal unemployment, medical pre-tax, dental pre-tax, they are deduction. But all together, all these deduction are actually pre-tax deductions. Sorry, not the taxes, but the medical and dental and vision, they are pre-tax deduction. So those three, I can group them and I can call that bucket as a pre-tax deduction. And then that bucket is called as pay component group. So I can define all those criterias. Other than that, there are two more tabs on that configuration piece where I can define my rules that when employees on leave, what pay component or pay component group I want to process. We will learn more about it when we talk about run category. But at a high level, from the interview perspective, if the question is asked that what run category do? So run category, first it funnels the population, what will be processed. Second, it derives the tax treatment, that is it a supplemental taxation is required or it's a regular taxation required. Third, how and what to calculate on employees who are on leave or who are terminated, or what we are processing or what we are calculating on our off cycles. So that all together is defined at run category level. Third, the most important one, we want a pay group. Now, pay group is an organization, or pay group is a grouping of similar kind of employee together who have some common criteria to be part of that pay group. When I'm saying some common criteria, the one and the far most important common criteria is the pay frequency. All my biweekly employees need to be on one pay group. Now, if there is any other criteria which I want to use as a factor for distinguishing, I can break down my biweekly pay group into smaller pay groups. Like I'm processing my whole population on a biweekly payroll, but I pay my salary people current, whereas I pay my hourly people with a lag of 1 week, which means that my period start date and my period end dates are going to be different for my salaried people and my hourly people. Now, with this requirement, what is going to change? First, what the question we will ask ourselves is that, what I said, I'm going to pay my salaried people currently, which means that if we are talking about my salary people and my payment date is Friday of a week, Friday of this week, which means that I'm paying my salary people for this week as at the same and the last week. So before week end, I'm paying it out because I pay current to my salary people. But when it comes to hourly people, I'm paying them with a lag of 1 week. So the time what they work and the time they punch in my time and attendance system for last week and week before that, that time I am going to pay them out on my Friday. So for salary people, the period start date is Monday of last week and period end date will be Sunday of this week with a payment date of Friday. For my hourly people, my period start date is week before last, Monday of a week before last week, and my period end date will be Sunday of last week with a payment date of this Friday. So I need 2 period schedule. Now, I cannot have 2 different period schedule under one pay group. So one period schedule get mapped to one pay group, which means that I will need 2 pay group, one for hourly and one for salaried. Run category, I can have one run category because rules are same. I'm processing my regular payroll. So I'm assuming that I'm in there. This is not just for supplemental taxation. So I will expect earning codes which are getting taxed at regular withholding rate or standard withholding and supplemental as well. So I will have just one regular run category and I can plug in that one regular run category into pay groups. So we need to make a determination based on our requirement or how our company or our client is processing payroll. We will make a configuration or a design decision on how many period schedule we required, how many run categories we required, and how many pay groups we required. I will take a pause here and open up for any question before we get into tenant and start looking into each one of them. Okay, so let me ask you this question. If I'm saying that I work for a company and I am getting my payment on 15th and last day of the month, because in semi-monthly, I'm expecting payment to be processed twice. Now with this example, where I'm expecting a payment on 15th, so the payment I'm getting on 15th, if I am saying that I am getting paid current, which means that the payment I am receiving on 15th is from 1st to 15th. And the payment I'm receiving on last day of the month is from 16th to 30 or 31st or 29, depends on what month I'm getting. So payment period start date for first period is 1st of the month, and period end date is 15th of the month, and payment date is 15th of the month. For second period of the month, my start date is 16th of the month, period end date is 30, 31st or 28th or 29th, depend on what month we are talking about, with payment date as last day of the month. Now, if it is a bi-weekly, and we are taking an example where we are paying current and we are expecting a payment on Friday for 2 weeks, which means that my period starts last Monday and ending on coming Sunday with a payment date of Friday. If we say that we are paying on lag, when we are saying that we are paying on lag, which means that the period is already, the dates are already passed, and after that we are paying employees. So example is that if instead of getting payment on 15th, if I'm getting payment on 21st in my previous semi-monthly example, then my period start date is 1st, period end date is 15th, but the payment date is not 15th but 21st, because now I'm getting in lag the work I did, the period I worked on, I'm not getting before my period end date. The payment I'm getting after my period end dates. So that is what in payroll world we called it as paying on lag. And if I'm getting a payment before my period end date, in payroll terminology, we called it paying current. Let's go into next slide. So period schedule. What information we need to plug in when we are configuring period schedule? Based on our understanding, we got 3 things. When we are talking about period schedule, it is nothing but it's a pay calendar. We are defining a schedule that when one first period is getting processed, paid, when second period is going to start and pay date. So bare minimum, we know that we have three dates to populate: period start date, period end date, and payment date. But is that all? No, that's not all. We need to configure more and more information, or more information than just these 3 dates. So before we go through the slide, let's see how it looks like in Tenant. So I'm logged in as Logan. Now I want to search for period schedule. And as you figure it out that Workday search is very dynamic, very fluid, very intuitive, you just need to type in keyword. And it will prompt you with the tasks which are there. Like create period schedule. If you already have a period schedule created, you can edit that, you can view that. And if you want to create any period schedule from scratch, you can go with the task called create period schedule. Once you create a period schedule, you can go as far as for 5 years, but the best practice is to build period schedule at the time of implementation for next 3 years, and then keep building year on year basis. So now I'm taking an example that I went live in Workday 3 years ago, and now for 2022, I need to build my period schedule. For that, I cannot go and I cannot type in 26 pay period. Earlier, that was the case, and that was very cumbersome. But with last release, Workday come up with a batch process where you just need to say for what period schedule you want to generate a period and what will be the start date for first period. And then system will generate period for you. So that is very cool feature. So that I can use to build my periods. Now let's take an example, or let's look into existing one. So I will take semi-monthly because that is what our friend Betty Lou is on. So I'm opening semi-monthly period schedule. Okay. And immediately you see there is a lot of information to plug in. First, name. You can name anything. I can name my period schedule as Abhi's schedule. You can name your schedule as Anwar's schedule. Whatever you want to name it. But the best practice or the recommendation is always to name same as frequency so that it will be easy for everyone to understand, or it is by the name itself, it will tell that what kind of a period schedule we built for it. So semi-monthly, and then we need to pick the frequency. What is the frequency of this period schedule? Is it a weekly or a semi-monthly or quarterly or monthly, hourly, daily, bi-weekly, annually? I'm looking for semi-monthly, so I go with semi-monthly. Now, is this period schedule is just used by payroll or by absence or by time tracking? Depending on usage, we need to pick the functional areas. If this is meant only for payroll, I will expect just a payroll usage. What is regular pay date? So because it is a semi-monthly, I will say 15th or last day of month. If my payment date happens to fall on Saturday, I want to advance my payment date by 1 day. If my payment date happened to fall on Sunday, I want my payment date to advance by two days. So that if my 15th or last day of month is falling on Saturday on Sunday, based on that, based on these rules, it will get promoted or it will get pulled forward to Friday before that. Now, if we are talking about payroll, so I'm expanding a section which is meant for payroll. Now, payment date offset. This is a field. If my payment date is falling on a company holiday, do I want to offset my payment date? Yes, I want to offset my payment date by 1 day. So if Friday is, say 15th is on Friday and Friday happened to be a holiday, then I want my payment date to be Thursday. I can do that by putting this. If I don't want any offset, I just put it 0. But as I said, everyone is working, everyone knows that if payment date is falling on holiday, it gets pulled forward. So we always put -1 day. Now it says that this period schedule is used by how many pay groups? It says pay group usage 4. It's just an informational field. It is not an editable field. You cannot do anything, but this tells you that how many pay groups are using this period schedule. And list of the pay groups is here. So this is used by Canada semi-monthly. It is used by USA semi-monthly, admin regional, professional corporate, and professional regional. So information is there. So when you are editing, you know that by making an edit to period schedule, you have an impact on these 4 pay groups which are using this period schedule. How many run categories are using this? So one run category is using this, and the run category which uses this period schedule is regular. So I'm good with that. If I happen to be using this absence period schedule under absence functionality and time tracking, I will have corresponding fields to configure. But if from payroll perspective, I don't care. Another feature is continuous payroll calculation. We spoke about it. This is a good feature to have it, but again, it is not something like, you just enable, you need to configure to uptake this functionality. So what this functionality is, if I turn on the continuous payroll calculation, after certain time, or I can configure that after how many days post my period start date, I want system to do a pre-calc. And after that pre-calc, system will continuously running recalcs. And it is not like, it is continuously running. It runs on a designated interval, but it runs on its own. There is no need or there is no human intervention required to go and kickstart the process of recalculation. It just do it. Now, what are the advantages and what are the disadvantages? Advantage is that there is no need for payroll processors to remember that they need to recalculate. Otherwise, they need to remember and they need to put a recalc on every single night of payroll processing, or they do ad hoc recalc throughout the day if they need to. But with continuous payroll, they don't, there is no need for them to remember because system is going to take care of it. What are the disadvantages? If we don't pause this, then there is a chance that we finished our payroll balance, we balance our payroll, but because the continuous payroll is running behind the scene, there is a chance that if there is any changes happening in any other functional areas like compensation or a benefit or time or absence, that change will trickle down and that change will get calculated without knowing it. So it is very important that it is a good feature to have, but we need to mention to our customer that you need to put a pause in a window when you are doing a payroll processing or when you are doing auditing or when you are balancing your payroll. And Workday understand that. So if I say, okay, I want to enable auto calculation of initial payroll pay results for period, it will come back and it will ask me after how many days you want to get started. So default number of days after period start date. So if I'm on a bi-weekly, my payroll team, they don't start until Friday of a week, Friday of first week, which means that my period is starting on Monday, but they are not starting or they are not doing pre-calc until Friday of that week. So how many days I need, after how many days I want to get this kickstart? Monday 1, Tuesday 2, Wednesday 3, Thursday 4, and Friday 5. So I want this after 4 days. What time? So with this configuration, I want to kickstart first pre-calc on Friday midnight. So after 4 days at 12 a.m. and I can pick my time zone depend on where my company or where my customer is. If it is in EST, I can pick EST time zone, pick Eastern time zone, and then system will kickstart after 4 days from the period start date at 12 a.m. in midnight as per Eastern time. Now, this tells us about the time when the first pre-calc will start. Now, with second checkbox, we can control that when we want to put this continuous calculation on pause. So if payment date is Friday, which means that my ACH file need to go out on Wednesday because every bank need 48-hour window before the payment date. They should get the file. So if we are expecting that on Friday morning, salaries get credited on our employee's bank account, then our ACH file need to go out of the door by Wednesday, which means that by Wednesday, payroll need to be complete and need to be settled down. Now, if Wednesday is the date, and we know that based on volume of our customer, they need at least 1.5 days for auditing and balancing. Then I would say if Friday is my payment date, Thursday is first day, Wednesday is second day, Tuesday is my third day, and Monday is my fourth day. So on Monday, I want this to be stopped, not at AM, but half day Monday. So I will say 12 p.m. So by noon on Monday, I want continuous payroll to get stopped. Don't run continuous payroll after that because that is the time when my payroll team will get start with their auditing and payroll balancing. And again, I can pick the Eastern time to be consistent. So I set this up and these are the generic rule. But if we want to override this, so based on my rules, every single period is getting populated with the dates. So for period, which is from 12/1 to 12/15, my pre-calc will start on 12/5 and my continuous payroll will go on pause on 12/11. But based on period to period, if we want to alter it, we can go ahead and we can override at individual pay period level. So we set the rule, but we can override the rule at individual pay period level. Now let's see what other fields we have when we are defining our period scheme. So period will start on 12/1, period will end on 12/15, and payment date is 12/15. We are not calculating payroll on every single day of our pay period. We will start calculating payroll for this period from 12/5, and we keep on, calculating in between, because there are a lot of steps to be taken. It's not like, you just calculate your payroll and done. There is laundry list of items to be taken care after you after you pre-calc all the way up to you settle your payroll. At least there are 200 steps in between. So payroll team typically need 2 to 3 days every pay period to process the cycle end to end. So that is the reason why I'm saying that I will kickstart my pre-calc on 12/5 and I will be ending by 12/11. If I end by 12/11, then I will need to give 1.5 day for payroll team to complete auditing, do the payroll balancing, and when they are satisfied with their all checks and balances, they will complete payroll, they will settle payroll, and then the ACH file will be out and deposited to bank on 12/12, so that there will be a clear 48-hour window to expect the payment on morning of 12/15. So we normally backtrack from the payment date. So what we have here, first, as I said, we will have a period start date, we will have a period end date, and we will have a payment date. Now payment date, again, when we want to pay, if we are paying current, you can expect payment date is either a period end date or before period end date. If you are paying on lag, then you can expect payment date after your period end date. The fourth field is accounting date override. Now by default, whenever we are doing a GL, we are doing a GL for a payroll, it goes by payment date. So the fiscal period, or I would say ledger period on a financial side, is not aligned or not same as my payroll period. The ledger period are normally processed on month-to-month basis, which means that if we are processing this period, which is from 12/16 to 12/31, then the ledger period for this period is December. Now here my payment date is December. So there is no need for me to do any accounting override. But just in case, if I'm paying on lag, which means that my payment date is not going to be 12/31, but something in January of 2022. So my payment date is actually falling in the ledger period, in the next ledger period. But I'm paying for a period which is for December. Now, if my financial says, or financial system says, that you need to book all this cost for a period which is ending in January, ending on December 31st against a December month, then what I need to do, I need to do an accounting override, and I will say that I want to do accounting at this date, not at payment date. Because if I don't do this and I keep it blank, and my payment date is not 12/31, but say 1/7/2022, then all the cost will get booked in January ledger period on financial side. So when we are designing, or when we are making a decision on accounting date override required or not, we need to talk to our controller, and we need to understand that what financial system is expecting. If they are good with sending the cost based on payment date, we don't need to override it. But if they are not good with sending a cost as of payment date, but they want us to send the cost by period end date, then we need accounting override. But again, we need it not for sure, because we need to see that what my payment date is. If I'm paying current, I don't care. If my financial says you need to book your cost by payment date and I am paying current, then I know that my payment date is falling in my period start and period end date. It is not going beyond that. But if I am paying in lag, then that time I need to do little bit more research and more analysis to determine that do I need to do accounting date override or not. Now, we already spoke about continuous payroll fields, so I'm going ahead of it. Now, next set of field is related to time tracking. So there are 4 date fields. Some of them are very clear from the field title itself, like open time entry, lock time entry, unlock for adjustment, and close time entry. Before I explain, based on field label, what you understand from that, what you mean by open time entry. So open time entry is when the time tracking system will allow employee to start putting their punches in for this pay period. Which means that if, again, I mean, if you guys are familiar with time and attendance system, there are two type of time entry. One is real time punches, like we are swiping or we are punching in and punching out. Another one is lapse time, like it is not happening in real time, but normally the consultant, they put their timesheet. I mean, I put my timesheet, but I never go by at what time I started, at what time I ended. I just go and say, okay, on Monday I worked 8 hours, on Tuesday I worked 8 hours, on Wednesday I worked 8 hours, Thursday 8, Friday 8. But if we are talking about retail industries or hospitality or manufacturing, these guys are actually swiping their badge in and badge out. So when they do badge in, the time get punched. So if somebody badged in at 7:03, 7:05, 7:10, that is the exact time gets recorded. Now for them, it is very important, not only for them, but for me as well. System, they don't want me to go and put the time for future dates as well. If I am not, I mean, if I haven't worked on time, why will system allow me to go and put it? Again, it depends on job to job. Normally, I mean, for me, it is open. So I mean, I can put the time entry for a full month or for next 6 months. And if there are any change, I go back and I can edit it based on, I mean, I'm taking a day off or I end up working more than 8 hours. But for these people where, I mean, their non-exempt workforce is a majority portion of their workforce, they are very critical and they don't want, I mean, them to misuse the system. So normally they want this to be open on the day when their periods start. So if this is non-exempt period schedule, if this is used by non-exempt population, I want the time tracking ability for this period to be start on first day of my pay period, that is 12/16. So what I would say, on 12/16/2021, they can start entering time for this pay period. And what time? 12 a.m. Before 12 a.m., date or the period is not started. So you cannot go and you cannot punch in for 12/16 before 12 a.m. midnight. If you want to punch in, that punch will go for 12:15, not for 12/16. Open time entry is clear that is the time when we are opening period for entering time. Lock time entry, as the name indicates, we want to lock system for time entry, which means that after this date and time, there will be no punch. Punch will be there in the clock, but it will not get transmitted to payroll. Or the punch will be there in clock, but it will not get recorded into Workday. Or if we are using Workday punch in and punch out, there will be no punch in and punch out ability for the day we lock the system. So based on my period date, on 12/31st, I need to pay out for the period of 12/16 to 12/31. But normally in case of non-exempt, because non-exempt get paid for time they recorded. So if we are paying them out on 12/31, payroll team will have no time to review the time, no time to balance the time, no time to audit the time. So normally when it comes to non-exempt, we always end up paying on lag, which means that your period payment date is not going to be 12/31. Your payment date is going to be something like this, a week after that. So we will start entering time on 12/16, but we will say we will lock the timesheet by at start, and I will say I want to lock my timesheet for making any entry by employee on midnight of 12/31. So on midnight, period is going to get locked for time entry. So whoever punched after 12/16 to 12/31, those punches will stay in. And when I'm going to run my payroll, those punches will get picked up and processed. After that, if anyone want to record their time, either they need to reach out to admin or they need to wait for payroll to be processed and completed for this pay period and again get open this period for making adjustment. So on 12/31, I stopped it. Why I stopped it? Because after 12/31, payroll will start processing. They will do all their job steps, what they normally do, like auditing, chasing down, manager or supervisor, that all the hanging timesheets are approved and they are ready to be picked up and processed by payroll. After I process my payroll and now payment is out of the door. So if payment date is 1/7, then payroll need to be completed by 1/5. So by 1/5, I am completing my payroll for this period and now the payments are out of my door. So on 1/5, I will say, now this is a time because I have done everything with the payroll for this pay period. Now I am ready to open my timesheet for adjustment. So if any employee who missed out or who need a revision or who need a correction for any of his time entry for this period of 12/16 to 12/31, now my timesheet is open for making adjustment. So they can do adjustment after 1/5/2022 post noon for the period what we just close and settle. So whatever they are going to do for that period as an adjustment, either they are going to add new punches or they are going to revise their punches or they are going to delete their punches. All those changes will be picked up in next period, which is happened to be 1/1/2022 to 1/15/2022 with payment date of 1/2022. Whatever revision or whatever adjustment are happening on a timesheet for this period will get picked up and get paid with this pay period, but these are now retro to this. So when I'm running my retro payroll, all the changes will come forward as a retro changes, and those retro changes I will combine with my on-cycle payment for 1/1 to 1/15 period, and those will get processed and paid out. Now I cannot keep the timesheet open forever. So we need to discuss with our customer and we need to understand that typically how far back employee go and do their adjustment. If you ask this question, your customer will come back and say forever, but we cannot keep this timesheet open forever, which means that your employee will have ability to go back to a timesheet after 2 years and make any adjustment. There is no harm in doing that, but what it costs, it will force payroll to go back 2 years, which means that for in case of semi-monthly period, go back 52 periods, calculate retro for that period. And when payroll is doing a retro calculation, it is sequentially recalculating every single period which is falling from that event where the retro is generated all the way up to current pay period. So if I keep this timesheet open forever and employee decided to go back and make a correction in time sheet, which is 2 years ago from here, they can do that. Their manager can approve it. But when I'm going to calculate retro, I end up calculating retro period for 52 retro period for this employee to pick up those changes and get paid out. So now just imagine if there is an in and out entry, how big pay slip is going to be for that period, because it is bringing 52 in and out, in and out, in and out for every single pay component which we want to recalculate as part of retro. So it is always good to have a common ground. We need to have a policy. I mean, it is a very bad policy to allow employee to go as far back as they wanted. My personal advice is to keep the timesheet open for 2 quarters. But again, in some cases, they want to keep it for an year. Year is okay, but not over an year. So if they say, okay, we want to keep it open for an year, what I would say, the time, if everyone do their job right, I'm not expecting any time to be entered after 12:31. So now you are saying that you want to keep this open for an year. Okay, I will keep this open for an year, but as of 12/31/2022, this period is set in stone. It is done and dusted. There will be no adjustment available via time tracking. If you want to do an adjustment, you need to go to payroll, and then payroll will do the calculation outside the system, and they will load those correction or adjustment as a payroll input on a pay lines. So this is what all these 4 fields do and what we can get out of it. It should, and there will be balancing or audit reports across both the systems. So if I'm expecting, say, I have a Chronos as a system for time and attendance. So my employee will do punch in and punch out in Chronos. Chronos will send me 40 hours of regular, 10 hours of overtime, 8 hours of straight time, or 30 hours of shift premium. I will load those hours against corresponding earnings onto Workday payroll as a payroll input. Workday payroll will calculate. Post calculation, what I will do, I will write a report, or I will have some kind of extract which will extract the information out saying that I paid 40 hours under regular earning, I paid 10 hours under overtime, 8 hours under straight time, and 30 hours under shift premium. Payroll processor will do compare. This is what I got from Chronos. This is what I got from Workday payroll. My hours are matching, which means that whatever I loaded from Chronos, that is what I get. That is what I see that got paid out on Workday. So this is one of their checklist item where they do checks and balances between time coming from one system versus what is being paid on payroll. Now let's look into next section of a field, which are related to payroll GL accrual. Now, I mean, whoever is aware or whoever is familiar with financial and GL, they know that, I mean, forward accrual are critical part of it. And why we need a forward accrual? Because we need to forecast the cost. So if our pay period is crossing ledger period. So if I go back to my discussion just few minutes ago, where I said that not necessarily your ledger period is aligned with your payroll pay periods. In case of semi-monthly, it does, but normally in bi-weekly, your bi-weekly sometimes starts, I mean, bi-weekly period starts on 21st of month and ends on 6th of other month. So in this scenario, what is happening? My pay period is crossing my ledger period. So ledger period is from first of the month to last of the month. Now with forward accrual, what system do is system actually do a forward accrual for remaining number of days in that pay period from period start to month end, and that creates a GL line and get feeds into financial accounting. So again, the checkbox create forward accrual will not be required for every single pay period. The pay period which is falling completely in a ledger or in a calendar month, we don't need forward accrual for that. But we need forward accrual for a period where my payroll period is cutting across 2 calendar months. So in that scenario, I will check the box, and then based on how many days are falling in previous month, I will say, just I'm taking an example that my period starts on 23rd of month and month is 30-day month. So which means that 23, 24, 25, 26, 27, 28, 29 and 38 days I need for forward accrual, and my period is a bi-weekly period. So I have 14 days, and then accrual date is last day of month, and then I will do whatever I did a forward accrual, it will get reversed on next day of next month. That is how I put the configuration. And then when payroll is running a payroll accounting, it creates a forward accrual entry, and then it creates a reversal entry as well. And both the forward accrual entry and reversal line goes into financials, and it will create a corresponding credit and debit lines on their side. Now, last section is payroll settlement date override. Now, let's take an example where it happens that my period schedule is shared between multiple countries. So I have a Canada biweekly, I have a US biweekly. Both country biweekly periods start on same day, end on same day, and they have a common payment date as well. So what will be my best practice? Do I create period schedule, separate period schedule for Canada and separate period schedule for United States? Or do I create one period schedule for both? What do you guys think from optimization perspective and from efficiency perspective and system maintenance? We should have one. Now, when we have one, not necessarily that my US holidays and Canada holidays, they are same. US have Thanksgiving, Canada doesn't. Canada have Boxing Day and Queen's birthday, US doesn't. Now, if I have a same period schedule, which means that I have only one field as a payment date for that period. And I have only one option to offset my holiday, if you remember what it does. So if for a pay period where Queen's birthday is falling, Queen's birthday is falling on Friday in Canada, but in US, Friday is my payment date and Friday is not a holiday. So for Canada, I want payment to be finished, payment to be deposited on Thursday, whereas for US, I still want payment to be deposited on Friday. But I cannot do that because I just have one payment date. And if I put the offset here, what will happen? For both countries, payment will deposited on Thursday. Now to come across this, Workday provides us a override ability. What does override ability do? With this, I have an option to say that if my country is Canada, then my payment date should not be 31st, that is Friday of that period, but I want payment date should be 30th. So when we are running our settlement process, Canada ACH file will generate with a payment date of 12/30, whereas USA ACH file will be generated with a payment date of 12/30. So that is what we can get out of this payroll settlement date override. And again, we will need that if we have a multi-country payroll in Workday. But if multi-country payroll in Workday and we happen to use same period schedule across multiple countries. But if we have just one country payroll in Workday, there is no need for me to even worried about this section of configuration. So again, I mean, flexibilities are there, but it is up to our requirement. It is up to our customer and their data. What configuration we need to do, whereas what configuration is not make any sense or not applicable to us. Okay, and then these are all editable checkbox, which is called used in payroll. So as and when we complete our payroll or period, this checkboxes get checked. So let's go and see if any one of them is checked or not. Here it is. So two of them is checked. Let's come across what these two periods are. So I can see that 1/1/2019 to 1/15/2019 and 1/16/2019 to 1/31/2019. These periods are used in payroll, which means that payroll is run for these two periods. Now, just to cross verify, we can go and we can see that what pay groups this period schedule is used by. So I can see that 4 pay groups, they are using this period schedule. I can go and check that US semi-monthly professional corporate. Do I have anyone in that? I will pick my favorite employee in GMS, Betty Lou, and I can go to her pay profile and I can check what pay group she is in. So she is in USA semi-monthly professional corporate. Is this on my list? Yes, it is. So which means that I'm expecting there are 2 pay period run for this pay group. If I go to results, I can see these two. So 1 to 115 is completed and 116 to 131 is in progress. There are just 2 payroll run happen in this tenant for this pay group pay period combination, and that is what we are seeing when I looked into periods used in payroll. So I just come across 2 periods which are used in payroll. None of the others are in. As and when we go on completing and opening new periods, the checkboxes are going to increase. So this is how we can set up period schedule. Now there is an activity for setting up a period schedule. We will do it on our Wednesday class after we finish, other 2 processing frameworks. Then we will go all of them together. So each one of you will have your own setup. And then when we build on activities of running payroll, creating earnings, so that each one of you will have your own run category, own pay group, own period schedule. So we are not stepping on each other's configuration. That is the idea. So we will do some practical activities on our Wednesday class. So now period schedule is over. Before we move ahead on to run category, any doubt, any query on period schedule? Now let's see what slides are having. Now run category. As I said, run category is a big funnel. So it decides or it tells what population we want to process on our pay run. Do we want to process only actives? Do we want to process all on leaves? Do we want to process all terminated? All terminated is a big no. We don't want to process all terminated. Similarly, we don't want to process all on leave, because if there are hundreds of employees are on leave without pay, why will I care about processing their payroll? Because if they are on unpaid, they are not going to end up getting anything. So I don't want them to process. But what if I have an employee on unpaid, but there is some kind of a bonus or some kind of a one-time payment they are eligible for? If that's the case, yes, I do want to process them. So there are multiple conditions under which I want to pick an employee, and as a logic, I want to skip on employee. As I said, I don't want to process terminated, but what if there are a group of employee who are in severance and they are expecting a payment? Yes, I want to process them. What if there are terminated employee who got some retro corrections? Yes, I want to process their retro. What if there are a terminated employee with some payroll adjustment? I do want to process them. So based on all this criteria, we need to think, and they are not alien criteria, they are pretty standard criteria. So more and more you configure payroll, you know all these criteria by heart. So there is no brainer or no thinking required. When you get enough experience on it, you know that when I'm setting up a run category, this is the basic thing I want to set up, because this I do, or these values I configure on every single customer, no matter what. Based on customer policy, how they treat severance, how they treat terminated payment, how they treat STD, LTD. Some things are going to change here and there, but 80% of the time the run category configuration is not going to change. So again, we will follow our intuitive search. I will just go ahead and I will type run category. So with partial typing itself, system prompt me. Again, standard options: create run category, delete run category, edit run category, view run category. I don't want to create new. I want to just see any existing one. So I will go ahead and click on edit. And I will go with regular, because regular is the one which we need to have, or as a rule of thumb, you have to have one regular run category in a tenant. No matter what, you are using a Workday payroll or payroll interface or payroll integration to third-party system, you have to have regular run category, because regular run category is the run category which is provide you a mechanism to process your regular payment or your regular payroll. So I will pick regular run category. And when I click on OK, it will open up regular run category in edit mode. Okay, got it. So name, again, it is a free flowing text. You can name anything what you want to. For activity per se, we will name regular with your initials just to use as an identifier, so that you are not using someone else's configuration. But in tenant, when you are doing it for real, for customer, always follow the best practice and name regular as regular. So here it is, here also it is name as regular run category. Now we have a limiting thing. If my run category for Canada looks different than my run category for United States, I can have two run categories, one for Canada, one for US, and I can put a country field on it, which limits the usage of that run category for that country only. But here, I don't want to put that boundary, because I just want to have one run category configuration, and I want to keep it open to use on any country pay group combination. I am not using this as a regular run category, then I can uncheck it. Like if it is a bonus run category, I can, I am not going to check this box which says regular run category, but if it is a regular run category, we need to check this box. Now there are 3 tabs. On tomorrow's class, we will cover the other 2. Today, let's focus on general tab. So general tab is having first section which says worker to process. And this is what the funnel I was talking about. This, whatever values we are configuring under worker to process, it drives that what worker population we want to bring in to my payroll engine. It tells us that out of thousands of employees who are active, terminated, on leave with inactive status, no matter what kind of a HR status they are in, who I want to pick and process in my payroll. This section actually tells us that. So if we go into it, it is having a column called status. So in this status, there are numerous field or numerous pre-built criterias for us. First, I am saying that I want every single active to be picked and processed. Fair enough. I want every single employee who is on leave to be processed. Okay, fair enough. But again, if I want to make a limiting condition on it, I can create my own condition saying that first I will always, best practice, always search for anything which is already pre-built or provided by Workday. So I'm saying that on leave, yep, pick every single employee who is on leave, but on top of it, pick employee who is having not on leave with payroll effect, which means that on a leave configuration, when you set up a leave plan, there is a checkbox which says payroll effect yes or no. If that checkbox is payroll effect yes, it tells payroll not to pay employee, which means that that leave type is leave without pay. If that checkbox is unchecked, then payroll will keep paying at the as it is an active employee. So normally the leave types which are leave with pay, in those scenario you will see that checkbox is not checked, and that is a on-off switch for payroll to stop their payment or continue their payment. So now I'm saying that okay, I don't want to care about it, because when it comes to on leave, there is another tab for me to make more specific criteria or make more specific eligibility rule, because non-active is what? Non-active are either an employee is terminated or employee is on leave. Because when you put employee on leave, the status for employee changes from active to on leave. So they are no longer active. Now their HR status is on leave. So I can say that on general, I am saying that, okay, pick every active, pick every on leave employee, pick terminated employee who has one-time compensation payment plan, pick terminated employee who is having one-time payroll input loaded on Payline, pick terminated employees whose pay through date is greater than pay period start date, and pick terminated employee who happens to have some kind of a retroactive adjustments from previous pay period and coming into this pay period. So I am picking terminated employee only if one of this case is true, and all the conditions which are on different rows, they are or to each other. They are, I mean, logical or to each other. So if I want to read, then I can read like this: active or on leave or terminated with compensation payment or terminated with one time or terminated with pay through date or terminated with retroactive differences. If you are interested, we can add another row and we can see there are lot of options with me. Now, if we want to put a filter upfront on leave, I have an option. I can say pick employee on leave only if they have a comp payment, or if they have a payroll input for earnings, or if they have a payroll input not specific to earnings. If they have a payroll input for earning or for a deduction, let's pick them and process them. Or if they are on leave and those leave types are having payroll effect unchecked, then pick them. So now we are putting more granular criteria. Again, whatever you are checking here, they are available to put as a cascaded condition under selection criteria as well. Or you can build your own condition criteria. Like for active, I can think of one condition. I would say that if employee is hired just before 3 days to payment day, I don't want to process them because I mean probably they don't, I mean probably employee haven't finished their onboarding steps, which means that their tax elections are not in, their direct deposit details are not in, their I-9 forms are not in, their W4 configuration, W4 elections are not in. So if they don't have, I mean, I just don't want to process them. I will have a waiting period for them. And when I go to next pay period, I will pay them for their retro plus their on cycle for next pay period. Because by next pay period, I will have all the statutory details in the system. So it will be less of an adjustment required or less of a hassle required. So in that case, what I would say, pick all active, but my condition will be higher date plus 3 days is not equal to or greater than my payment date. So if they hired before 3 days prior to my payment date, I have no problem. Let's pick them and process them. But if they hire in last 3 days of payment date, then I want them not to process. So I can put additional criteria depicting that condition to stop them from getting picked up and processed. So all this, I mean, very much configurable. We can build our own conditions or we can use whatever is delivered by Workday. But the intention is we need to define that whom all we want to pick and process when we kickstart our pay calculation. Now next section. So now, I mean, we define worker to process, whom we want to process. The second section is talked about setting up that what will be my gross accumulator, what will be my net accumulator. So I am setting up a pay accumulator called gross, and what all I want to put into gross. So I just put, I mean, add a pay component group, add to gross, which means that every single earning which is going to be part of my gross income need to have this pay component group on it. So if I'm defining a earning code called retention bonus, that retention bonus is going to get into my gross, which means that when I'm defining earning code retention bonus, I need to include pay component group, add to gross on it. Otherwise, it will not be a part of gross. So when you are, if you forget to put this pay component group on retention bonus will get calculated on paycheck, but it will not get added to your gross accumulator. Similarly, we will define a net accumulator. Now, what net accumulator is? It is gross accumulator minus my pre-tax deduction, minus my post-tax deduction, minus employee statutory tax, minus if there are any garnishment orders, then everything need to be deducted. That will give me my net income. And that net income is nothing but my net accumulator. So I define that for this run category, what will be my gross accumulator, what will be my net accumulator. And these are the mandatory thing. If you are not defining that, then your payroll will go into error, and you are not able to save the run category configuration page as well. So you need to include gross accumulator and net accumulator for sure. On top of it, we need to instruct what other pay component group I want to calculate. So I want my statutory taxes to be calculated. I want my employer taxes to be calculated. I want my non-cash taxable benefit to be calculated. If there are any custom, like memo entry is a custom, I mean, we create a memo entry pay component group, and all memo entry codes I plug in underneath it. So I want memos and memo entry codes to be calculated. So every single pay component code which is not included on gross or net, if we want that to be calculated, we need to plug in that. If we fail to plug in those, then earning and deduction which are part of this pay component group will not get calculated when we are processing regular run category payroll. The next section is payroll processing. What kind of a tax treatment we want on this? Is it a non-regular taxation, which means that do we need a supplemental taxation? If yes, put it yes. If we don't, because the regular is not meant for a set supplemental, because if we check this box, then the ability of processing non-supplemental earnings will not be available. If we check this box, then we are specifying, or we are forcing system to calculate only earning codes which are supplemental earnings. So because I mean on regular, I'm expecting non-supplemental earning codes as well. So I'm not going to check this box. But if I am setting up a run category, for example, I'm setting up a run category called bonus. And on that bonus run category, my plan is to process only bonus earnings. And all bonuses are eligible for supplemental taxation. So in that case, I will go ahead and I will check this box, because I want every single earning code which I'm going to process or bonus should be considered for supplemental taxation. Now, when it comes to supplemental taxation for state, do I want flat rate like 25%, or I want an aggregated method of taxation, or percent of gross? So there are multiple options depending on state to state. But if you don't check it here, then whatever we are configuring at a company state configuration level, that will take precedence. But if we check this here, then by force, it will always taken as a flat rate. Then what will be my minimum net amount? As I said, 99.99% of the time it is zero. If net amount is going into negative, we don't want to process it. That is not a feasible scenario. So we will set that minimum net amount is zero. And then, I mean, this is again a useful information. It tells us that this run category is used by how many pay group. So it says 9 pay group. If I click on that, I can see list of all those 9 pay group, which is using regular as a run category. And this is always a good guide that, I mean, if whenever you are making a change to regular run, I mean, run category combination, you need to see that at how many places it is going to impact. So just to do an impact assessment, it is always, I mean, all this information which is available either in a usage tab or under a usage field is always, I mean, good to review it before you commit any change. What is purpose of run category? Run category is a mechanism which allow us to tell that what population we want to process, what conditions we need to apply on those broader category. If we want to have any finer selection criteria, we can define those selection criteria, but at a broader level, we can define that what employee pool we want to pull into my payroll calculation. Other than that, we define gross and net accumulation. We define what all pay components to calculate or what other pay component group to be calculated. We need to plug in all those. Then what kind of a taxation we want to apply on it. If it is a regular run category, we don't want to select the supplemental taxation checkbox. If it is a supplemental run category, then we can check the supplemental taxation checkbox. or at a state withholding level, do we want, supplemental rate, supplemental taxation happen to be at a flat rate, or do we want to have a supplemental tax based on what we configure at company state withholding configuration table? Based on, our decision, we can check or uncheck this box. What is my minimum net amount permissible on my paycheck? We can define that. So this is what information we have on first tab. Tomorrow we will look into non-active and off-cycle tabs, like what we need to configure to support our non-active population, which comprises our terminated population and our leave of absence population. And when we are processing our off-cycle checks, what we need to configure in order to support our off-cycle processing. Before we wrap up, let's quickly see on slides, is there anything we haven't covered for general tab? So the screenshot we have on this is for general tab. We talked about it. Then it is talking about non-active and off-cycle. So we will finish that in tomorrow's class, non-active and off-cycle. Then we will go on to pay group and payment election.
All right, let's test your knowledge. Here's a question for you. Which of the following are processed as part of the calculate payroll process in Workday? Option A, pay statements. Option B, tax withholding option. C, pay components. Option D, all of the above. Take a moment to think, and when you're ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck. Type the correct answer in the comment section. Hi everyone, I'm excited to give you a preview of ZaranTech's Expert Workday Payroll training course. In this intensive program, we'll explore Workday Payroll's key capabilities so you can optimize payroll processes and compliance. Whether you're new to Workday Payroll or an experienced user looking to expand your skills, this training delivers tremendous value. We'll cover the fundamentals: setting up payroll, managing pay groups, understanding calculation logic, and producing payroll reports. ZaranTech has trained hundreds of Workday payroll experts globally. Our real-world customer examples will empower you to streamline payroll operations and stay compliant. This is an outstanding opportunity to become a certified Workday payroll expert. Visit the link below for full information on ZaranTech's intensive Workday payroll training program. Thank you.
So let's get started. We finish up to general. Now we will get started with non-active. So when we are saying non-active, what non-active means to us? In Workday, as compared to any other system, there are only three statuses at an employee life cycle what we are maintaining. First is active. Active is like employees active and they are working. So we saw that for active, we set up a rule on our general tab where we say that we want to pick every single active, and that is what is expected from any payroll. All the active employees should be considered as a part of payroll calculation, and then payroll should calculate them based on their hourly rate or based on their annual salary. If they have any allowances, those allowances should be calculated based on what is the allowance frequency. Is this allowance is going to get paid on a pay period basis, or is this allowance is going to paid once in a year or once in a quarter, depending on how compensation set them up. When we're talking about active, we expect payroll to calculate their taxes, statutory taxes accurately for employee portion of it and employer portion of it. If employee is having any voluntary deductions, those deductions should come out. If employee is having any benefit elections, those deductions should come out. After taking out, after all the deduction, all the taxes, the check will get produced with gross and net. So that is what we are expecting normally when we are talking about active. But now when we saying that non-active, so if my employee who falls in my non-active bucket, so my non-active bucket is all the employees who are on leave. Now, leave, there are two types of leave. One is leave without pay, one is leave with pay, and one is without pay. So when we are talking about leave without pay, again, the status in Workday is on leave only. So there is no segregation saying that, like we have this segregation of statuses in SAP or in PeopleSoft in any other system, where we saw that employees having leave without pay as a status, leave with pay as a status, or terminated with pay as a status, terminated as a status. But in Workday, there are only simple three statuses: active, on leave, and terminated, period. So how payroll will know that employee is on leave with paid pay or without pay? And if you remember when we spoke about it, there is a checkbox on my leave definition, which tells payroll that if employee is put on this leave, does this leave is considered as a paid leave or non-paid leave? If that checkbox, and that checkbox is called payroll effect, if that checkbox is checked, then it is an unpaid leave, which means that payroll will stop employee paying. But if the checkbox is not checked, it means that payroll will consider that employee is out on leave but with pay, and payroll will continue paying employee as active employee was getting paid. But again, there is a catch. If we talk about the short-term disability, so short-term disability is normally a paid leave of absence, but we don't want employee to get a regular salary, which is kind of 100% salary. Mostly what customer or mostly the best practice in industry is that whenever employee is going on short-term disability, we need to calculate employee's short-term disability earning. And there are multiple reasons. First, the short-term disability is provided by insurance provider. It is not coming out of, organization or a company who is having who is having an employee as a employed person. So that is the reason why we cannot keep paying regular salary. We want to spit out STD, and again, based on company to company, some companies give STD first couple of weeks are at 100%, then it eventually reduced to 75, then 60, then 40, 50, and then finally, there is no, because then employee get transitioned to LTD. So for STD, there is a rule that employee need to produce a paperwork. That paperwork need to be get approved, and when paperwork get approved, then employee transition from active to STD, and then payroll need to process their STD like that. So as I said, now how will I let payroll know that employee is on short-term disability? Again, because when employee is on short-term disability, I don't want regular salary to come out. I want payroll to stop the regular salary and pay short-term disability salary to them. In order to do that, my short-term disability should have payroll effect checkbox as checked, which means that whenever employee gets put on short-term disability, payroll will see that, okay, the checkbox is checked on short-term disability, so let's stop the regular pay. But because short-term disability, we need to pay employee out, we have another earning code called short-term disability, and we have a calculation rule based on, at what process or in what passage or in what phase of a short-term disability employee is in. Is employee is in 100% short-term disability, or is it in 75% or a 50%, or now employee exhausted all the options and now employee can go on locked-up disability, which is typically unpaid leave, or payroll will not paid, so there is nothing will come out as a check to employee. So in non-active tab, that is a place where I define that when my regular salary stops, what earning code will get calculated, will get processed, so that employee will get some dollar amount on their check. In this screenshot, if you see, the first thing is long-term disability. So based on this configuration, we are saying that if employee is on leave, and what kind of a leave? Canada locked up disability and USA long-term disability. So if employee is on one of these leave type, then calculate long-term disability pay earning. Now, by looking into this, I don't know that what that earning calculation look like. Is it 50%? It is 25%? What kind of a percentage it is? When employee is not terminated or not on leave, then employee is in active status. Now, the tricky part is when employee is on leave, how we considered employee? Do we consider employee as an active, or do we consider employee as an inactive? So what Workday do is on leave configuration, it provide a checkbox, and that checkbox is saying that this, when employee is on this leave type, consider this employee as inactive for our headcount report or any headcount reporting mechanism. If that checkbox is unchecked, then employee is considered as active, but their HR status is on leave. And I can quickly show that, then it will make more sense to you guys. Short-term disability USA. Let's see how this leave type is configured. So this is a leave type definition. As it says, this leave type is specific to United States and it is enabled for only employee. And these are the check boxes what I was talking about. So these normally called as leave impacts. So when employees on short-term disability, in this definition, employee is not inactivated, which means that employee is considered as active, but their HR status is on leave. Payroll effect is yes, which means that payroll will stop paying their regular salary. And if employee is expected to get any earning code or any dollar amount to be paid to them, then it has to be defined on this non-active tab of run category. So if you observe the second last row on the screenshot, short-term disability pay. So what we are saying, calculate earning code called short-term disability pay when employee status is on leave and employees on leave type disability short-term Canada, disability short-term USA. Yep. So this is how the leave are having a cross-functional impact. So we looked into inactive, we looked into payroll. If I have a absence accrual effect flag check, which means that when employee gets on this leave, they should stop accruing for their PTO plans. If benefit effect is yes, then employee should stop getting benefit. There should be a benefit event, and then there will be a need to revise their benefit election. Similarly, when employees on leave, their stock vesting should be re-trigger, or by the time employees on leave, the stock vesting period should be increased by that duration. Similarly, when employees on leave with continuous service effect as yes, then it means that employees service is stopped, and when they come back, again it get kickstarted. So there are different effects based on what kind of a leave it is. So when absence consultant, they configure this, they normally go by the policy or a employee handbook, and based on that, they set this up. What we worried about from a payroll perspective is payroll effect, yes or no. If I see payroll effect yes, that means employee will not be considered to be processed as per the general rule. I need to do a separate configuration or additional configuration on non-active tab of a run category if I'm expecting employee to get paid under certain earnings code. So from first day in office effective date, all the flags are resetted. So everything again, their absence accrual get restarted, their payroll get restarted. If we have inactivated as yes, then they become activated, and they will again come as a active headcount in headcount report. Okay. So now let's get into tenant and see what else we have on run category on non-active tab. So again, we will look for a keyword run cat, and I will pull in regular. We will go on non-active on-cycle or on-demand replacement. So basically on-cycle is on-cycle, on-demand is off-cycle. So what rule we configure here in GMS? I want long-term disability to be calculated when employee is on long-term disability leave. And if I want to see this earning, let's pull this earning code. We will learn more about earning code, but let's see what this earning code is calculating. So this earning code is saying under eligibility section, you can see that calculate this earning code or resolve this earning code only if employee is on long-term disability leave. Fair enough. Because I don't want this earning to be calculated for active employees. This earning code is meant for long-term disability. So I will first check that employee is on long-term disability or not. If yes, then only go ahead and resolve it. Now, what my calculation rule is saying? My calculation rule is saying base prorated divided by pay frequency factor. Let's open this formula. So base prorated divided by frequency, period frequency factor. I will further dig down here, and this is a Workday owned. And what it says, return frequency factor numeric value for the period. This represents the frequency factor that is associated with the frequency tied to corresponding period schedule. So we are working with semi-monthly. So my frequency factor will be 24 because that is how I am de-annualizing anything. Now, from where that base prorated is coming, let's go and check that. So it is saying base prorated is coming from benefit plan insurance coverage amount. So it is taking benefit plan coverage amount and then dividing that number by 24 because I am working with semi-monthly. If it is bi-weekly, then that pay frequency factor will be 26. And because I'm using benefit calculation, so I'm expecting that it should tell me what benefit plan, because if we go and check, and if we check Betty Lou's benefit elections, active benefit elections, we are here. Yeah. Does Betty Lou is having any long-term disability plan? Let's check. I don't see she is having any benefit plan, long-term benefit plan. But someone who is having benefit plan, they have a coverage amount, and that coverage amount is pulled by that calculation, what we have here. So that will pull the coverage amount, and that coverage amount, annual coverage amount, will get divided by 24, and then whatever amount is coming, that is going to be my long-term disability earning amount for the period. This is how we make connection. We will do more practice. We will look into more when we get into earnings chapter. But this is just a quick preview. Just to, I know you are curious how it is going to calculate. So I just show how we can build a calculation, how we can make the connections between cross-functional modules. But from run category standpoint, it is important to define this condition under non-active tab. So now, whenever we put employee on LTD under these two leave types, employee is going to get paid under an earning code called long-term disability. But what is the condition for them to get paid? First, they need to be on these leave types. Second, they are elected under, or they elect that long-term disability benefit plan. For plan what we have on our earnings code. Because if they haven't elected benefit plan, there is no coverage amount. And when there is no coverage amount, anything, 0 is getting divided by 24, results into 0. So earning will get calculated, but earning will calculated with 0. So one condition I can think of missing here is I would like to put one more condition under worker eligibility saying that employee is enrolled in benefit plan what I have on my earnings code. Because as I said, if employee is not enrolled, but employee is on LTD, payroll will end up resolving the earning code with $0, which is kind of a nuisance on my paycheck. If I'm not getting anything, why should I see that row with $0? It makes no sense. To stop that, what I will do, I will make a condition saying that first, employee need to be on LTD. Second, employee need to be enrolled in benefit plan for LTD. If both the conditions are true, go ahead and calculate dollar amount for me. If any one of these condition is false, which means that my eligibility is not getting passed, so earning will not get resolved. So on my paycheck, I will not see any LTD earnings. And guys, this is very important because you don't want earning code to be resolved on paycheck if employee is not eligible. There are two things. First, it will look ugly on paycheck. Second, there will be an additional burden on my calculation engine, because even though it is calculating zero, but sequentially payroll calculation engine need to evaluate eligibility, need to go through calculation formula and then resolve earning. So it is taking system resource, which makes my payroll processing slow. So key thing is, more tighter your eligibility, that will give you faster execution or faster run of your payroll process. Let's switch back. So this is what we saw. Now there is a salary, base pay and severance ongoing. I'm saying that I want to calculate these two pay component or these two earnings when employee is terminated, but I don't want to calculate for every single terminated employee. I want to calculate these earnings code for terminated employee who satisfy this condition. And what does it? That condition is workers pay through date is greater than or equal to period start date, which means that pay through date need to fall in pay period for which I'm processing my payroll. If this condition is true, then I would like to calculate, or I would like these earning codes to be resolved. So in US, whenever there is a reduction in force, now reduction in force is like pandemic started. Now all the hotels were closed. So they don't need, they never required that much of a staff what they used to have before pandemic. So what they say, we will let people go. Instead of 4, we just need 1, or instead of 4, we just need 2. So when they let these 2 people go, they cannot just, cut down like, oh, we don't come from tomorrow. No, that is not possible. They need to offer them, or they need to give them some cover, so that, and that cover, changes from company to company, condition to condition, industry to industry, job level to job level. So normally what company says, okay, we are reducing our workforce and we are very sorry for that, but we will give you 45 days of salary as your severance package, or we will pay you next 6 months salary as a severance package. Now there are multiple type of severance package. In some cases, there is a lump sum. So normally, when this happens, the paperwork is handed over to employee with multiple options, and multiple options are like, take lump sum money and walk out of the door. In second case, don't take lump sum money, but we will keep paying you 80% of your salary or 100% of your salary for next 6 months. Now, if employee go with option 1, then as part of their full and final payout, lump sum amount gets paid out. But if employee go with option 2, then we need to keep running their payroll for next 6 months. And how do we tell that, okay, when we want to stop it? We will set the pay through date. So if employee is getting terminated today and they sign the option 2 to get paid for next 6 months, my pay through date will be today's date plus 6 months. And that pay through date I will set in my system. So every time, whenever I am running a payroll, this condition for that employee will get evaluated. Is my pay through date is greater than my period start date? Yes. Then let's go ahead and calculate severance pay for employee. When the period comes that my pay through date is now lower or smaller than my period start date, it means that 6 months are over, there is no need to pay. The severance amount is paid as per the agreement. So no need to pay, no need to process employees payroll, and no need to pay severance amount. There is no written rule, but it depends on, your offer letter, what contract you have. Contractual employee may get, but again, it has to be mentioned in your contract, then only. Okay. Or it depends on, under what circumstances company is doing reduction in force. Is it, the company is getting bankrupt, or company is downsizing, or company is acquired by any other company? Depends on situation. Things change a lot. So it is kind of a fluid. There is no statutory or there is no legal guideline saying that this is what you need to follow as a rule. But yeah, one thing is sure, whenever there is a reduction in force, there is some kind of a severance package to be offered. So this is what in case of termination. Now, third thing, again, we can see that when employee is on leave, and what kind of a leave? There is no leave type mentioned. That means this is applicable for every single leave type what we have in our tenant. So it is not specific to disability. It is not specific to long-term disability. It is not specific to paternity or maternity. If employee is on leave, we want these earning codes to be paid. And what those earning codes are? Floating holiday, salary-based pay, sick pay, vacation paid. And there is one pay component group which is called benefits during leave. If we can open this pay component group, we can see the member. So it has member earnings, and most of them look like they are imputed incomes. So imputed income will get calculated, and there are deductions, and all these deductions are basic deductions like life insurance deduction for employee, employer portion of it, then standard life employer portion, dental post-tax, dental pre-tax, medical. So all these pre-tax and post-tax deduction, if there are any, what employee elected, we want them to be calculated when employee is out on leave, any kind of leave. So let's assume that employee is on short-term disability. So what we are expecting for short-term disability, what we are expecting payroll to calculate. Here it's a long-term disability, so this will not get calculated. This is for terminated, so this is not condition for short-term disability. This is condition for short-term disability because I have leave type wide open. So when employees on short-term disability, all this earnings code and this pay component group will get calculated. On top of it, short-term disability pay earning code will get calculated, because here I am saying that when leave type is any one of two, calculate short-term disability. Let's go and dig in further, because it is something similar to what we checked on long-term disability earning. Let's see how this is configured. So similar structure, if employee is on short-term disability leave, then only process this leave. And again, it is same, base prorated upon pay frequency factor. Base prorated is coming from benefit plan insurance coverage amount. And if I go and check, instead of long-term disability, now we have a short-term disability benefit plans. So I keep it open side by side. This is LTD earning, where we have all LTD plans. This is STD earning, where I have all STD plans. But if employee want to get into it, they need to be enrolled in these plans. Now, here you can see short-term disability. There are two type of short-term disability. One is saying paid at 60%. Another one is saying paid 70%. And what is my criteria? If my year of service is less than 5, employee having a short-term disability, they will get paid 60% of their salary. But if my year of service is more than 5, then they are eligible to get 70% of their base salary. So automatically, based on their year of service, their election or their eligibility to elect benefit plan changes. But again, we are not worried about it, because all this thing is handled by benefit consultant or by benefit team. What we are worried about is we need to just make this connection. We need to know that if I'm paying short-term disability, how my math will work, how I calculate what I need to pay. Do my math says pay 70% of base salary, or do my math say pay 70% of annual coverage amount in that benefit plan? So we need to know that, and that is what we are worried about as a payroll consultant. Your employer is offering you PPO, EPO, and premium plan for medical. You elect one of them based on what suits you, correct? But when I'm configuring deduction, medical pre-tax deduction, I don't want to configure medical pre-tax deduction for three codes for three different plans, because underlying calculation is same. Whatever is your pay period premium, I want to deduct that. It's up to you what you are electing, and it's up to benefit plan configuration to spit out or to calculate that premium amount for me. Similarly here, based on employees' eligibility or how many years of service they have, benefit plan, I mean, when employees going and doing a benefit election, the eligibility rules are embedded in benefit plans. So they will see the option they are eligible for. And when they see option, they will elect it. And based on that, if we need to derive anything, we will derive it. But based on this calculation, benefit plan is doing everything. So what benefit plan is doing? Benefit plan is passing us coverage amount. And what we are doing, we are just dividing that by our pay frequency. But instead of benefit passing me, if benefits say, oh, we are not passing anything, you just need to read our plan. And if it is 70% plan, pay 70% of semi-monthly salary to employee. Then I need to put a conditional cal, because then I need to first check employees enrolled in any plan. If employees enrolled in any plan, is employee enrolled in 70% plan? If employee enrolled in 70% plan, then I will put an arithmetic calculation saying that, okay, grab the semi-monthly salary and multiply that semi-monthly salary by 70%. So we are not actually, if you see, we are not. So eligibility is not stopping them. If employees not at all enroll, still earning will get calculated. But will I get this coverage amount is dependent on employees' enrollment into plan. And to answer your question, yes, there are 3 plans in which employee can enroll. So, but employee cannot be enrolled in 3 plans at once. They will be in either one of them. So all these 3 plans are mutually exclusive to each other. So they will be in plan 1 or plan 2 or plan 3. Why I'm saying yes and no? Because yes, we need to list out, because if we don't list out, system will not get calculate anything. What system by default is, so let's assume that I forgot and I don't have any single thing configured on this tab. If I set the run category like that, and if my employees on leave and I calculate their payroll, what system by default is going to calculate is system will going to calculate their statutory taxes, and if there are any compensation one-time payment, or if there are any payroll input which we loaded on pay line, those will get calculated by default. No matter what, I have those codes listed out here or not. But if any one of this is not true, then employee will not get calculated. Employee will actually get skipped from my calculation engine. And if I don't want that, then I know that for every, specifically in case of terminated employee, what I'm expected to be calculated, what I'm expected to pay out to them, what I'm expected to calculate as a benefit for them, what I expected to calculate as a earning for them. So we need to think through that, and based on that, we will put these rows in the run category. If we know beforehand, awesome, nothing like that. But normally when we do end-to-end testing or a system testing in project life cycle, that is the time we come to know that, okay, I put employee on leave and I am expecting short-term disability to come out. I am expecting taxes to come out. I am expecting, all the pre-tax deductions to come out. And now, employee is not getting calculated. What will be the reason? Come on, run category and see. Do you have anything? No. That answers your question that why employee got skipped. Now, if I have something here, but still I can see that partial calculation, like short-term disability earning is coming, but none of my pre-tax deductions are coming. Where I will see, I will come to this tab and I will see, oh, I have a row for short-term disability earning code, but there is nothing I am calculating on deduction side. So what I will do, I will put something as a pay component group called pre-tax. If I want to calculate every single pre-tax deduction. Yes, go ahead and put pre-tax. No need to list out every single deduction code. All the deduction codes which are grouped under pay component group called pre-tax, and they are these many. So 21 deductions are there which we categorize as pre-tax. If my policy says on short-term disability, calculate all 21. Employee should contribute or employee should pay premium for all 21 deductions. Yep. There is no need for me to list out 21 deductions on this column. I will just go ahead and I will say, okay, calculate short-term disability earning and calculate all pre-tax deductions. And I am done. Recalculate payroll and you will see the expected result. But yes, to make the calculation happen, we need to list out earnings and deduction on this tab. Similarly, for terminated, if we are paying severance, like severance lump sum or severance ongoing, we need to have included them, and we need to tell system that pay ongoing if pay through date is greater than pay period start date. In case of lump sum, there is no restriction because this pay severance lump sum is coming from compensation. So if compensation is processing, it means that they evaluate all the condition. They know that employee is eligible to get this much dollar amount as lump sum. If they are processing payment, payroll will suck it up. Payroll will process that. That's all. Now, bonus is when we are normally, 90% of the times I saw that bonus is not getting paid when employee is out on leave. When they come back from leave, if they are eligible for any bonus, like full bonus or partial bonus or prorated bonus, they will get paid their bonus when they come back from leave. There normally, as a HR practice, you never pay bonus or you never give salary increase while employee is out on short-term disability or long-term disability, because we never know that employee is going to come back again or not. But in case of active, no need, right? Because active anyways, everything will get calculated for them. There is no need for mentioning separately when we are processing earnings and deductions for active population. But if if your organization is generous and they want to give bonus for employee on STD or LTD, answer is yes. We need to include bonus as payroll component to calculate. Otherwise, it will not get calculated. It comes as part of your severance worksheet. So there is a functionality in compensation called severance worksheet. So when employee is negotiating with HR populate, dollar amount, what they agreed upon into that severance worksheet, and that actually holds that pay through date. And that severance worksheet is one of the sub-step in your termination BP. Yes. So this is all about non-active. So when we are talking about non-active, we are predominantly considering on leave and terminated. Now, last but not the least, off cycles. So when we are processing off cycles, we need to tell, again, it's kind of annoying, but we need to tell system through run category that what pay component or what pay component group I want to calculate on my off cycle payments. Again, by default, employee taxes and employer taxes will get calculated, but earning codes, deduction codes to calculate, we need to list them out. Similarly, how we list them out for non-active. So we can take first example. So in this first example, we are saying that I want all the 401k pre-tax or post-tax or match to be calculated when I'm processing an off-cycle payment with reason, additional pay or bonus. And one more thing, when I am processing off-cycle payment for active, so if I end up processing off-cycle payment under off-cycle reason of additional pay or bonus for employee who is on leave, what I'm expecting, nothing gets calculated for them. Why? Only deductions are there. You may ask me question that, okay, only deductions are there. Why there is no earning? If there is no earning, how the deduction will come out? Just think about it. When you are processing off cycle, do you expect anything to become automatically or any connections to be automatic? Because in what scenario we process off cycle? If we miss something on cycle, or if we are correcting our on cycle payment, that is the time when we are doing off cycle. And when we are paying additional, we know that what we are paying. So 99.99% of the time when I'm processing off cycle, I am loading that information directly as a payroll input onto pay line. And if you remember, I said, if we load anything on pay line, then that will get processed by default. No matter what, we have that earning code, or we have that deduction code, or we have that tax code listed out on run category tab or not. And why then what is my need to have a 401k? The reason being, if I am loading bonus as off-cycle payment, I still want 401k to come out, because 401k are formula is same. 401k is pulling the 401k eligible earning times your election percentage. So my 401k is dependent on earnings. That is why I need to mention all the codes which are dependent on my earning code, what I am going to process. What I am trying to emphasize here is that you cannot just blindly put all the codes on run category tabs for non-active or active. You need to think logically. How I configure this earning, how I configure this deduction, and if I don't put anything, does this going to come out? On top of it, you need to question yourself, how is this information is going to come into payroll? Is this information is get processed outside payroll, and then as a effect of that transaction, I need to get it paid in payroll, or do I need to load directly into payroll? If I'm going to load directly into payroll, I don't need here, because system will calculate that default. But if compensation is processing, and then I'm going to grab that value and process that in my off cycle, yes, then in that case, I need to include that earning code on my list. Otherwise, it is not going to get calculated. And if I have 50 earning codes to calculate for off cycle, does those 50 earning codes having any common thread or any common flavor? Like, can I group them together? If I can group them together, let me bundle them into pay component group. So it will be easier for me to just include that pay component group instead of loading 50 different codes. And the reason why I'm emphasizing on pay component group is that from the sake of maintenance, if tomorrow 10 more earning code we are going to create new, and if they follow the same trend, they are part of this bundle, then it is easier that I created 10 new code, and they are part of this pay component group. So automatically my pay component group is here. So there is no need for me to come back and revisit my run category and do some edits. So there is no way I can miss. And if I miss, it is not coming, then I need to revisit, I need to re-include. So maintenance will be very easy. So always think, when you are configuring, always think, how can we maintain it? It is not one-time job that I am doing implementation and I am washing my hands away. I need to think that whatever I'm building as a configuration, is it scalable? Is it maintainable? Is it going to make life easy for my customer? And at the same time, it is easy for you as well, because you are saving 49 data entries on your side. Because if that pay component group is having 50 earning codes, you just need to put once instead of 50 times. So think through that, and then decide that what way you want to put the entry. Sometimes there is a case where it is not getting grouped. So if there is no possibility of grouping them into pay component group, let's go ahead and key in those codes. We always create retro on cycle. If something is not paid, or if there is a situation of overpayment or underpayment, we can either club those, owe money or pay money onto my next on cycle. But if employee cannot wait for next on cycle, we normally process those retro changes on off cycle and clean those retro things. So that is a reason why for retro there is no need for non-active or off cycle. Payroll tax data. So this is tax workbook where you have company federal tax, company state tax, company local tax, if there are any other tax, and then there are cross-reference table for county, work county, resident county, city. So this is how it looks like. And let me see if there is any employee level thing is there. No, I think all this is config data, but there is one more workbook where you can define employees W4 data, like what is their federal tax election look like, their marital status, their dependent allowances, their additional amount, all that. I hope on the run category we are clear now. Any doubt or anything which is unclear? And as I said, it is conceptually just try to get it conceptually. When you start doing practice in tenant, you will learn more about it. Now we will go on payment election rule if time permits today, but I really want to get started with pay group. Now, what pay group is? So pay group is organization, but it is called pay group and it is not part of organization. So when you do on your HCM, if you process your change organization BP, you will not see pay group on it. For pay group, there is a dedicated BP called assign pay group. And why? The reason is that although the fundamentally pay group is nothing but it's an organization, and in Workday we define organization as a group of employee who are grouped together based on common feature. So common organizations are supervisory org, which means that all the employees who are part of that supervisory org are in that supervisory org because they have a common reporting manager. If I put employee into cost center, then there is a common theme in those employees that they charge their cost to that cost center. If I have a group of employee, they are excellent performer, then why I group them together? Because their last year's performance rating is excellent performer. That's why they are part of that organization. Similarly, when we are putting employee into specific pay group, why we put those employees into that pay group? There are multiple reasons. First, they have some common nature, like they are all non-exempt, or they belong to particular location, or they belong to particular company, or they are getting paid at same frequency. So the most important factor for grouping them is they are getting paid at same frequency. That is the reason why they are part of this pay group. Other than that, as I said, they are part of same location. They are part of same job profile or level of job profiles. Based on that, we normally factored our pay groups. And again, lower the number, less the number of pay group, better it is, because that That way we don't need to run the payroll again and again. So let's assume that I have 7 pay groups, which means that for running a complete payroll for that period, I need to run my pay calculation 7 times for each pay group. Another way is to group them together into something called pay run group. So I can just kickstart my process for that one pay run group and I'm done. But there are cases I saw that there is no way we can restrict or we can reduce the pay group. The reason is either company is too big that I don't want to put 100,000 employees into one pay group, because what will happen when I kickstart the pay run for them, all 100,000 employees will get calculated on that, and my pay run is going to take hours of time to get completed. In that case, to get an advantage of parallel processing, what I would do is I will break down my 100,000 employees into some logical chunks based on executive group into one. Then I will divide them by East Coast, based on West Coast, South, and further North. By doing so, what I'm going to achieve? First thing, I will have a good control on who can see what. Like, I can compartment my security, because if I'm running a payroll for 100,000, then definitely there will be a big payroll team, and then specific people are responsible for specific population geographically. If someone is supporting South payroll, then they will not be aware of East. And if they are not going to run East, why will I give them access to see the East data? That will give me good control. At the same time, I divided my 100,000 employees into 5 groups, which means that all this payroll team, they can kickstart their pay calculations concurrently. So all the parents will run in parallel to make maximum usage of system. So these are some of the design factors we need to consider when we are forming pay groups. Now let's switch into tenant pay group. So assign pay group, I was talking about this. So this is a business process, assign pay group. Now this business process can be a standalone business process, or it can be a sub process to other business process such as hire, such as change job. Because when we are hiring an employee, we want HR who is performing an hire, we want them to put employee into pay group. When they are changing or when they are doing transfer, promotion or demotion, if because of any of this transaction, if their pay group is going to change, then we want them to assign them into correct pay group. If we stick to our example, if employee is transferring from North to South, then we definitely want pay group to be changed from North to South. Then we will embed this assigned pay group as part of change job. So when they are performing this transfer through change job, this sub process will be triggered, and then HR will switch their pay group from North to South, so that they will be in correct pay group for their payroll processing. Now, instead of creating payroll, I will go and I will see if there is any existing pay group. Yeah, so I will go and check on existing pay group. Semi-monthly, I will go with that. Semi-monthly professional. Let's open this. Instead of opening into, or instead of viewing, I would like to edit. So this is what I want to show. So although it is saying pay group, it is not showing anywhere. It is not showing organization. But if I want to edit, you will see the organization. And in order to edit pay group, you need to go under organization and you need to click on task called edit organization. Then it will open up. So we can name our pay group how we want to name it. Type of organization is pay group. We can set the availability date, and this availability date is normally we set up as 1/1/2000. But if we are converting employees who are hired before 1/1/2000, then we can pick availability date as 1/1/1900. The key is that you need to have an availability date prior to oldest or the most senior employee in the company, so that if we end up assigning that pay group to that employee, it is available to get assigned. Subtype is pay group. We can edit name and code by clicking on that. So currently there is no code, but if I want to put some alphanumeric code or anything, it's a free flowing text box. So we can put anything here. So again, it's not a mandatory, but just in case, if I want to maintain this like US SM Pro, if this is my code, which is easy to remember, I can go ahead and I can do it. If I want this code to be part of my name, I can check this box. But I don't want to show in name. I don't want to maintain code. That is fair on my part. There is no need. So then we have a pay group. Now, is this pay group is part of payroll interface? If answer is yes, we need to check this box. But if we are planning to use this pay group for Workday payroll, don't check that box and set the country. Now, why country is important? Because when we define that this pay group is being used by country, then pay group currency get defaulted. So if I say that USA semi-monthly professional corporate is meant to be used for country USA, then default currency for this pay group is USD. And there is another, section where we can assign the auto assignment rule. And this is very important. Now, as I said, we are working with a customer who has 100,000 employees. Now, with such a large employee base, there will be hundreds of transfer happening from one region to another region. There will be few hundred of transfers or promotions they are happening for that. If that many hundred or thousands of transfers are happening throughout the day, is it advisable to ask HR or to force HR to go and assign pay group? No, that is not efficiency. Workday give us a rule where I can configure saying that if location state is in South, if my proposed location state in South, proposed pay group is going to be South pay group. If proposed location state is in North, proposed pay group is going to be North. That way, the pay group is going to get pre-populated based on the rule what we configure here. And if HR forget to assign pay group, this auto assign rule will assign correct pay group as per the rule onto worker record, and then a worker will have a correct pay group and eventually they will get picked up or they will get processed into correct pay run. So this is very important, and I always say that these are the small things where we can gain the efficiency, and these are the things which actually wow the customer. So always make use of this, and it is very easy. So it is just like business process condition rule. What this rule is saying, if primary worker address country is United States, location proposed is San Francisco, pay rate proposed is salaried, and job exempt is yes, pay group rule equal to no. So there is another pay group rule which says US executive. So if employee is not part of executive and all these conditions are true, then assign semi-monthly professional corporate to employee. Just define this rule, and there is no need to bother that employee is assigned to pay group or not. If we don't assign this group, and by mistake, if HR forget to do assignment in assigned pay group, which is part of hire or transfer BP, if they forget it, there are two scenarios. If they forget in hire, employee never be a part of any pay group, which means that they will never ever get picked up by payroll. In case of transfer, if they forget to change their pay group, employees still get picked up and still get processed under old pay group. So in case of transfer, the impact is not that bad, But again, if you are doing a payroll balance against your headcount report, then you will not be able to match the employee getting processed on payroll versus the headcount for that region. So this is optional, but as a consultant, you always advise to make use of it. But again, as I said, we can make use of, I mean, there are pros and cons with this. So whatever I spoke about up till this point for automatic assignment is all their pros. But to implement this, you need to have a clear cut demarcation between one assignment of one pay group to assignment of another pay group. If there is any overlap, then your rule is not going to work, because in order for your rule to work, your rules are need to be mutually exclusive to each other, which means that if I have a 4 pay group, I set my auto assign rule on 4, which means that at any given point of time, only one rule will return true. If 2 rule end up returning true, then my logic is going to messed up, which means that system will get confused that, okay, what pay group should I assign to this employee? Because I mean, the auto assign rule on 2 of the pay group are returning true. So before we go and say customer that, okay, let's implement this, we need to understand that how they are assigning their pay group. When you talk to them, when you interviewed your questionnaire with them, it will be clear in your mind that the rule what they are saying, they are mutually exclusive to each other or not. Like I said, my rule are simple. If it is north, assign north pay group. If it is south, assign south pay group. If it is east, assign east. If it is west, assign west. So dividing pay group based on region is very easy. They are mutually exclusive. But if there is any overlap, like an executive, what should I assign to executive from north? What pay group should I assign for executive from south? So that will have some kind of overlap, and that is a place where my logic can go wrong. So when you are proposing this, when you are designing this, you need to be crystal clear that all your rules are mutually exclusive to each other. Otherwise you will not able to get the result you are looking for, and then it will be a bad data entry. It will mess up the whole system. So next section on pay group is pay group detail. So this is a place where we plug in all our run categories. If my pay group is semi-monthly and I have, so in this example, we have 3 run categories. One is for regular payment, one is for bonus payment, and one is for commission. If I have run categories, I just plug in my run categories. And the moment I plug in my run categories, on my run category, I include my period schedule. So I can put my period schedule. I can have my pay run group. We will speak about pay run group in a while, but this is not a mandatory. So when you are creating your pay group upfront fresh, you can keep the pay run group blank. There is no need for you to populate pay run group. There is an ability to put the first period as an override period. Now I set my period schedule starting from 2000. But as a part of implementation, my first live payroll in Workday is going to be first period of 2020. Do I need to calculate and close all the period start from 1/1/2000? No. I can still, I can have a period on my period schedule starting from 2000, but I can pick the period what I'm going to process as a first live period in Workday. And that is what here we are doing. Here we are said that my first live period in Workday for my regular payroll is period of 1/1/2019 to 1/15/2019. For my bonus, it will be 11/1/2018 to 1/31/2019. Same is for commission. So the use of first override processing period is only required when we are implementing Workday or when we are implementing Workday payroll, just to tell system that what will be my first payroll when we started processing in Workday payroll. We have an option to set that how many days before or how many days prior we want pay slip to be appear or to be available for employee to see under self-service from payment date. If I put -2 days, it means that payslip will be available under self-service for employee to review 2 days prior to my payment date. If I put +2, then payslip will be available for employee to review after 2 days from my payment date. So this is another important thing. We need to talk to our customer and we need to understand how soon they want payslip to be available for review to employee before payment date. And based on that, you can put the number. Usage count. Now here there is nothing, but here we have 2. The reason why we have 2 here is because this pay group, period schedule and run category combination is processed on 2 pay periods. If we go and check on Betty, you can see that there are 2 pay periods. One of them is completed, another one is in progress. So there are 2 pay cycles calculated for this combination of pay group, run category and period schedule. And that is what we are seeing here as 2. When we complete 116 to 131 and we moved on to next 2-1 period, you will see usage count increase by 1, that is to 3. So here we plug everything together. So this is a place where we group all the processing parameters together. Whatever we learned so far, period schedule, run category and pay group, this is the place where we are bringing in together. And after we bring in together, this is more of a view section or review section where it tells all the information. It tells that what was the last period completed for this run category, what is my current period in progress, and what will be my next period to process. So this is more of an informational grid, but it is very useful grid. If somebody asks you question, do you know what period is in process? Go to pay group, come to this section, and this will tell you everything. You can tell that, okay, there is nothing processed or nothing calculated for bonus and commission, but for regular, I can see that current period, which is in calculation, is 116 to 131, the one which is completed prior to that, and then the next will be 21 to 215. Then next section is again, it's more of a review section. It lists out every single pay period which is there in my period schedule. So if you remember from our yesterday's class, we had pay periods up till 12/31/2020, and then one I created for we have for 12/31/2021. So that is what we have here. So it shows the calendar. So if somebody asks you question asking that how your pay calendar look like, come to pay group and export this out, and this export will tell you that how many pay period, what is my pay start date, what is my pay end date, what is my payment date for that period. And again, it captures the status, pay calculation is started or not, it is in progress or it is completed. You can get everything from here. Okay. So configurations wise, our work end here where we tie together all 3. Once you tie together all 3, rest of the grids get auto populated based on where we are currently in terms of payroll processing. That is all on pay group setup. There is one more important thing which I would like to cover is security. Now we did everything. So detail will give you what is my pay group start date, what kind of a pay, what is the organization type, visibility. So visibility is very important. There are four values under visibility. Now visibility means who can see that employee is in what pay group. And the 4 options what we have are these. First is everyone, which means that anyone in the tenant, they can see that employee belongs to what pay group. Second is member only, which means that if I am part of pay group, then only I can see my fellow member of that pay group, which means that if me and Anwar, we are in same pay group, I can see that, okay, Anwar is in this pay group in which I am also member. Similarly, he can see that pay group where I am also member. The other two are administrator only. So administrator only means if I am having any admin role on that pay group, like I am owner of that pay group, or I am payroll partner for that pay group, or I am payroll auditor for that pay group, then only I can see all the members who are part of that pay group. But if I am not administrator, then I cannot see. If I'm member, then I can see fellow members, but I cannot see if I'm not a member, I'm not an administrator, then I cannot see that Anwar is part of which pay group. The last option is administrator only, all organization. If we set this option for visibility, then any administrator, not necessarily he is having an administrator role on that pay group. If he is administrator for any other pay group, then also he can see member of first pay group. So if I'm administrator for pay group 2, still I can go and see that, okay, Anwar belongs to pay group 1. So based on how rigid, I mean, again, it in for some organization, it doesn't harm. I mean, they said it doesn't make any sense to show that, okay, employee belongs to what pay group. Some organizations say, even if they know that, okay, Anwar is part, I can see that Anwar is part of pay group 1 and Anwar can see that, okay, Abhi is part of pay group 2. There is no harm because it's just a static value. It doesn't tell that, okay, Anwar is getting what amount Anwar is getting paid or what amount Abhi is getting paid. There is no harm in just showing that, okay, what pay group they belong to. But some organizations, they are very strict on data sharing. They say, oh, we don't want anyone to know they are part of what pay group. So let's not show them. Then let's restrict this only to administrator only, which means that if I am an administrator, then only I can see, no one else can see. So this is one of the important point you want to, I mean, hash out and you want to gather as an input from your customer, how we want to set visibility. Okay. Now details we went through, pay group we already went through. I mean, this is the same thing what I covered, that where we bring all the three together and then we have some review grids where it shows the status, what pay group is in progress and all that. Member tab shows list of every single employee who is part of this pay, I mean, who are member of this pay group. So currently in this pay group there are 51 employees. If employee is assigned, so if I assign that, okay, for supervisory org there is an open position and on that open position this is the pay group where this open position is going to be, then only you can see this information. Otherwise you will not see this information. So again, it depends on staffing or it depends on core HCM. When they open a position, how much detail they are capturing on that position, in position definition or on that position. Roles, this is important. So this is where we define the security. Now Logan, she is the one who created this pay group. So automatically or by default, she becomes owner of this pay group. The another one is that the role which is getting maintained at pay group level is payroll partner. So payroll partner for this pay group is Betty Lou and Logan McNeil. If there is any other role we can define at pay group level, then we need to assign. So let's go and assign it. Let's see if there is any. If I go here, I can go to roles, and if I click on assign roles, effective as of 10/5, I can see that owner and payroll partner is already assigned. Do I have any role which I defined at pay group? Yes. There is an integration partner, there is a payroll accountant, payroll integration partner, payroll interface partner. Now I say I want somebody to be payroll accountant. And I say, okay, Oliver Reynolds is going to be my payroll accountant. Okay. So now Oliver is payroll accountant. Betty Lou and Logan McNeil, they are payroll partner, and Logan is owner. So when we are saying administrator only, then these three, they are administrator only for this pay group. So this is how we define security. Let's talk about pay run group. As I said, pay run group, if the frequency is same, like in this example, I have two pay group. One is for executive and one is for salaried people. But one thing I observed that both of them are having quarterly bonus. And one more thing, the people who are processing these two pay group payroll, they are the same. So instead of processing one pay group at a time, why I not group them together into one pay group and call that one pay run group as quarterly bonus pay group, pay run group, which means that when I am running my process, instead of running that twice, I can just pick pay run group and run that process. So in one process run, I am able to kickstart pay run for two pay groups. How I do that? Okay, same task. Let's edit pay run group and see if there is any. Yeah, we have one quarterly bonus pay run group, and you can see all the pay groups. So there are 7 pay groups which are combined under this pay run group. It has mix of Canada and US, but one thing which is common in every single pay group is they are all quarterly pay group. So you need to remember, you can group only those pay group who has same frequency. Now, if I want to run pay calc, and if you remember from our thing, period to calculate, one option is to go and select period, or second is run by pay group, which means that all the pay groups are listed here. Third is run by pay run group. So I can go to quarterly run group, I can select it, and what it does for me. Pay run group, just one, pick it, run it. If we don't run with pay run group, see all those 7 or 8 pay groups, they are listed on my list, and then I need to pick 8 of them, or which is kind of annoying. And if I want to run for all of them, instead of running them, I just use one checkbox and kickstart the process, and I'm done. So this is advantage of using pay run group. But this is how we assign pay group to employee. First option is configure automatic pay group assignment, and rule will take care of it. Second, manually assign pay group, which is through that business process called assign pay group. Third is sub process of a staffing. As I explained, assign pay group can be run independently, or can be a sub process to hire, can be a sub process to change job, or do a mass upload like a EIB. So on EIB, earlier this assign pay group was not available as EIB. So only option to do mass assignment is via iLoad, and iLoad was an implementer tool. So it was not open for customer, or it was not open for independent contractor. But with last release, Workday roll out public web service. So now we have a EIB to assign pay group through EIB template, which is very cool. So now end users or independent contractor, now they have access to this EIB, so they can assign pay group in bulk to employees.
All right, let's test your knowledge. Here's a question for you. When setting up payroll deductions in Workday, which component type would be used for deductions such as 401k contributions? Option A, additions. Option B, deductions. Option C, expense reimbursements. Option D, garnishments. Take a moment to think, and when you're ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck. Type the correct answer in the comment section. Hi everyone, I'm excited to give you a preview of ZaranTech's Expert Workday Payroll training course. In this intensive program, we'll explore Workday Payroll's key capabilities so you can optimize payroll processes and compliance. Whether you're new to Workday Payroll or an experienced user looking to expand your skills, this training delivers tremendous value. We'll cover the fundamentals: setting up payroll, managing pay groups, understanding calculation logic, and producing payroll reports. ZaranTech has trained hundreds of Workday payroll experts globally. Our real-world customer examples will empower you to streamline payroll operations and stay compliant. This is an outstanding opportunity to become a certified Workday payroll expert. Visit the link below for full information on ZaranTech's intensive Workday payroll training program. Thank you.
Defining earnings and deductions. So now, we are getting into more granular level of configuration. So up till this point, what we did is we basically laid down processing framework. So we first, if you recollect, what we did is we set up a settings at tenant level. So tenant level settings are important because they are the one which dictates that how our tenant is going to work. And there are specific settings for specific modules. So if you are working for payroll, you need to go and do edit tenant setup for payroll. If you are working in HCM, you need to do for HCM. Similarly for compensation, talent and performance, all other modules. And then there are some general settings like systems where we can do the branding, like what kind of a banner we want, or what will be the sign out time if a worker is not active in a session. So all that good thing. After that, we set up a tenant. Then we moved into processing framework where we define that how many pay frequencies I'm going to be required. I set up my payroll calendars basically under payroll period frequency, period schedule. Outside that, I define that, okay, if my payment date is falling on Saturday, Sunday, how I want that payment date to get advanced. If my payment date is falling on holiday, how I want my payment date to be advanced. Then there is a touch point to a cross-functional modules like payroll accounting or a time tracking or settlement. So we did some setup on period schedule. Then we learn about run category. Run category is a mechanism where we collate everything. We define our criteria in terms of what population we need to pick up. So we saw that on a general tab. We define our accumulator under net and gross. Then we define our pay component group, what we want pay component groups to be calculated. We define what kind of a taxation we required for this run category. And then we learn what we need to configure on run category for non-actives, which comprises employee on leave and terminated. What pay components we want to calculate it, under what kind of a leave type, under what kind of a termination condition, we define all that. And finally, we looked into off cycle, where we say that, okay, if I'm going to process an off cycle, do I need all the pay components to be calculated, or do I need specific pay components to be calculated? And if I need a specific pay components to be calculated, I list out those pay component on that third tab. And outside that, I define that when I'm processing an off cycle, I need to pick an off cycle reason. What is the reason for me to process that off cycle payment? Is it because it's an additional payment, or is it because there is some correction required, or is it because something is missed and we want to process it? So based on those reasons, we have a control that maybe during correction, I want earning code X to be calculated. But when I'm doing retro corrections, I want earning Y to be calculated. So that kind of a control we can get when we configure the third tab on run category. And then finally, we learn about pay group. So pay group is nothing but a combination of employees who have some common characteristic. The one and the most important common characteristic is their pay frequency. all the employees who are getting paid on a same frequency on a same day, logically we need to group them under one pay group. Other than that, if there are any other requirements in terms of job family or a location or a region, then we can further subdivide that pay group into multiple pay group. After we define pay group is a place where we connect period schedule and we connect run category, because pay group is nothing but just a grouping, and pay group is what normally in any payroll system we use pay group to kickstart our payroll calculation, to kickstart our payroll process. Now, when we are going to kickstart our payroll process, we need to tell this process that what period schedule or what pay frequency I'm going to use. So that is the reason in a pay group configuration, we bring period schedule in it. Other than that, we need to tell the payroll calculation or payroll process that what employee I want to pick up, what pay components I want to process, what kind of a taxation I need on it, what kind of accumulators I needed. So all that, if you recollect, all that we defined on run category. So we plug in run categories into pay group. So in short, pay group is a place where we group employees, where we group criterias or a condition which tells that who need to be processed, and we tell what kind of taxation I want, what kind of accumulators I want, what kind of earning and deduction codes I want to be calculated, and then at what frequency I want to process that. So all together, everything is now under pay group, and pay group is the prompt criteria or it's a run parameter when you are running your pay calculation. Now, this is the framework is laid down. Now, if I don't have my earnings, if I don't have my deductions, then just running a process is not going to give me what I'm looking for. So we need to start building basic building blocks or bones in a skeleton of a payroll. So earnings and deduction, they are nothing but they are a primary building block of any payroll system. Earnings are the pay component which provides the mechanism to pay employees, and deductions are providing us a mechanism to deduct amount from the employees in form of voluntary deductions, in form of general deductions, in form of benefit deductions, or in form of taxes. When we have all the earnings and all the deductions configured and we run the payroll process, then employee get paid, employee get deducted, and end result will be the net amount what we want to deposit in employee's bank account. If I say, Shima, go and set up car allowance, can you go ahead and can you configure it? No. You will ask me back, you will say, okay, I can set it up, but you need to tell me that my car allowance is going to be paid out on every single pay period. What should be the amount? From where I will get that amount? Who will be eligible for car allowance? What kind of a taxation I want to put in? Is it a supplemental tax or is it a regular tax? If it is a regular tax, is this amount is federal taxable? Is this amount is state taxable? Is this amount is local taxable? Is this amount is FICA eligible, Medicare eligible, social eligible, state unemployment eligible, or federal unemployment eligible? Is this amount what employee is going to get? Is this is considered as part of disposable earning when I'm calculating garnishment? All those kind of questions are required, or all those kind of information is required. Otherwise, we will not be able to configure our earnings or deductions accurately. If then we will look into, how my bonus earning is different from my regular salary earning. Then we will look into pay component group. What is pay component group? Why they are important? Why we need them? Then we will look into criteria. So criteria is a section when we are defining our earnings and deductions. Similarly, calculation detail is a section where we say, what is my calculation formula? If my car allowance is coming, do I need to pull that amount? That's it. Or do I need to do some arithmetic transformation? Or do I need to do some if-else logic? All that we cover under calculation detail. Compensation element. What is compensation element? Why it is important? What it links? Time earning. Time earning, we will understand and we will learn that what are time earnings. What is the linkage between time tracking and earning codes in payroll? How overtime is getting paid out? How straight time is getting paid out? Benefit plans. So all the imputed earnings or all the benefit deductions, they are coming from benefit plans. We saw one example yesterday when we were looking into STD and LTD earning, but we will look into more detail with benefit plans. What is my pay component security group? How can I set up a security around my pay components? What is costing override? How can I impose limits on it? So you know about 401k. So 401k IRS set up a limit that you can contribute only $19,500 on a yearly basis if you are below 50, and you can contribute additional 5,500 if you are above 50. So this is something limit. So we need to impose this limit on our 401k deduction code, that at any given point of time, employee is not going above the limit which is set by IRS. So how can we impose those limits? And what is record of employment in case of Canada? So ROE is very specific to Canada. It is a Canada specific thing. This requires in Canada, whenever there is an employment break due to termination, layoff, or due to long-term sickness or due to long-term leave of absence. Whenever employee is having any employment break, as a statutory requirement, it is employer's responsibility to pass on that information to Social Services of Canada. And then Social Services, not only this information that there is a break in employment, but along that there is a ROE form, which requires employer to send 52 weeks of earning back to social department. And then based on that, social department determines that what will be the unemployment payment they want to give to employee. So it is very important, and it is very statutory in Canada that whenever there is an employment break, this information need to be passed on to social services in Canada so that they can take care of employees' unemployment and insurance. Now, what is earnings? Earnings in typically, if I speak specifically about Workday Payroll, for me, earning is retrieving a value from compensation plans. Now, my compensation plan may be my salary plan, or maybe my allowances plan, or maybe my one-time payment plan. Now, difference between different type of compensation plans are used for different purposes. Like as I said, salary plan is meant for salary. Allowances plan are meant for the allowances which are getting paid on a recurring basis. So I am not setting up allowance plan to just pay out employee once. Then there is no point. I need allowances plan because the amount which we are paying out to employee is recurring in nature. Every week, every month, twice a month, or quarterly, employee is going to get that amount. So that is the reason why I'm setting up an allowance plan. The common example are cell phone allowance, car allowance, or internet allowance. These are some common examples. Another type of a compensation plan is one-time payment plan, like a retention bonus, sign-on bonus, referral bonus. All these bonuses, or spot bonus, or I would say performance bonus. All these bonuses or all these payments, they are happening to employee once, and there are no follow payment to it. If there are any follow payment to it, they are typically example of your incentive plan. But here we are not talking about it. So one-time payment plan are generally used to pay out employee once, and that's it. Another source or another category of earning where we have an interaction with benefit. The common examples are employer's contribution to healthcare premium, or employer's contribution to some of the payments, like gym fee waiver, or employer is providing some kind of a subsidy for lunch, or employer is providing some kind of a subsidy for product they are making. So all these are non-cash thing, which means that they are falling into imputed income category. Employees not getting those amount in cash in hand, but still they are taxable. And because they are taxable, we need to process them into payroll. Another category of earnings where we are pulling information from absence, like paid time off. Now paid time off is having multiple type of time offs. One is paid PTO, what employee accrues and employee take when they wanted. Another kind of a paid leave is when someone is performing jury duty, or whenever there is a death in family or extended family, then employee need day or couple of days off to serve funeral and all that. So that is called bereavement. And there are many more like that. Sick leave or sick time off or something like that. So all these time offs, they are basically paid time off. Similarly, there are unpaid time off as well. Like a voluntary service is a paid time off, but there are few scenarios where the employee can take a day off or so, or a couple of hours off, but those are not paid time off because they already exhausted all the options or all the days on a paid time offs. Now, whenever employee take paid time off or unpaid, specifically, let's talk about paid time off. When employee takes paid time off, if we are talking about non-exempt, because exempts are getting paid hourly, then in that case, we need to have a earning to differentiate between regular salary and paid time off, because the paid time off earning is something employee is getting as a privilege from company, and they are getting paid for their time away from work, whereas salary employees getting for their time for work. And the reason why I'm saying for non-exempt, it is critical to segregate that time away from work from time in work, is because when you are building your FLSA calculation, and in order to accumulate the FLSA hours and FLSA wages, normally you don't accumulate or you don't consider the hours and you don't consider the dollars which are coming from the earning which results from the time away from work. And specific examples are like bereavement, jury duty, paid time off. So that is one category of earnings. One more category of earning is pulling hours or pulling time from time tracking or time and attendance system and paying it out. General examples are overtime, straight time, shift premium, holiday time, all that. And this is very specific to non-exempt, because normally exempt people, they don't put their time in, and even if they put their time in, they just put the exceptional time. And last but not the least is payroll input, where we don't have any other, the earnings where we don't have any interaction. These are the earning code which are either calculated outside Workday and we are just loading and processing them, or we are not maintaining them into Workday, but still we want to pay employee out. So those are payroll input earnings. So these are the categories of earning code. Again, based on what kind of earning code we are dealing with, there will be some changes here and there in configuration. And let's move on to next slide. So earning prerequisite. So there is definitely, whenever we are talking about cross-functional, if my earning requires data to be pulled from compensation plan, then prerequisite for me is to have the compensation plan configured, to have compensation element defined, and that compensation element communicated to me as payroll consultant. So if I ask my fellow compensation consultant, I am working on the regular salary earning code, what is your compensation plan name and what is your compensation element tied to it? He should give me compensation plan name and he should give me compensation element, because compensation element is the bridge between compensation plan and earnings code. We are not referring to compensation plan while configuring earnings. What we are referring while configuring earnings is compensation element. So plan has to have compensation element, and that compensation element need to be included in earnings code. Otherwise, earning will not understand what compensation plan need to be referred and from what compensation plan dollar amount need to be retrieved. So this is very important. So the prerequisite for compensation earnings is that compensation plans need to be defined, compensation element need to be defined, compensation element attached to compensation plan, and same compensation element is attached to earnings code. Then we create a bridge between plan and earnings. And this compensation plan need to be rolled out or assigned to worker. Just defining a compensation plan or compensation element and attaching compensation element to earning is not going to work. We need to roll out or we need to assign these compensation plans to worker, because every worker will have a different salary. Mercy is having different salary, Shima is having different salary, I am having different salary. But what will be common in three of us is that we will have a salary plan on our profile. We will have a dollar assigned to that salary plan in our profile. And on compensation plan, we will have a compensation element which is referred into regular salary earning. And then when we run our payroll calculation for all three of us, based on what dollars are assigned to us, our salary will get calculated. Now let's see how this is done in tenant. So Logan is having 6 plans assigned to her. First plan is a salary plan. I mean, on this page, you can see that what is the plan type and what is plan name. So she's having a salary plan assigned to her. She's having allowance plan, car assigned to her. She's having mobile assigned to her. She's having a merit plan, which is 3% increase. This is nothing to do with payroll. It is more of an informative that she is eligible to get 3% rise on every year whenever the annual performance cycle is going to be processed. She is having bonus target of 10% and she is having a stock target of 10%. Again, last 3 rows are indicative and they come into play with advanced compensation process, which every company runs on an annual basis as part of their annual performance cycle. Now, simultaneously, let's open another employee. So she's not eligible for any car allowances, but she's having a salary plan on her profile. Let's see who else is there in pay group where Betty is sitting. So in order to get her fellow worker from same pay group, what I will do is I just open that pay group and I will go to members tab. This members tab will give me all members who are assigned to pay group called USA Semi-Monthly Professional Corporate. I will take Ellison Hunter. Let's open her. So when I checked Ellison Hunter, and if I go to her comp, again, I can see she is also having a salary plan and she is having one allowance, which Betty is not having, that is tuition reimbursement. And this tuition reimbursement is annual. So annually, Ellison Hunter is eligible to get $4,800. So Ellison's salary is 125K. Betty's salary is 145K and Logan's salary is 214K. But is Logan is part of same pay group as Betty and Ellison? No, she is not. And because I am going to work on this pay group, Logan is not my test case. So let me pick someone else outside Logan. So I will use Andrew Walton. Let's see what Andrew Walton is having. Let's go to Andrew's compensation tab. Go to his compensation. He's also having 4, no allowance plan, but he's also having a salary. So he is eligible for salary plan 117,000. Okay, fair enough. Now, what that mean to me? I will start with Andrew. I will go to his pay and I will open his pay result for period of 116 to 131. I can see that there is a holiday pay because it looks like there is a holiday in that pay period. And then there is a salary base pay, which is calculated. Now, what was our friend Andrew's annual salary? His annual salary was, we are talking about pay period in 2019. So his salary got changed as of April 2019. So I'm interested in checking his salary before this. How can I find that? I can go to pay change history, and this pay change history will give me details. So as of starting from 4/1/2018 up to 3/31/2019, Andrew's salary was 116,482. Okay. If I want to get how much he should get paid on a bi-weekly basis, I can put that number in calculator and I will divide that number by 24 because pay group is semi-monthly pay group. So he should get 48.5341 cents, $4,853. Is he getting that? Let's go to pay again, open his salary, and I can see he's getting exact same amount as gross earning. That is $4,853.42. And because there is a holiday, so 8 hours are getting, reduced from my salary base pay, and they are resolved separately on the check. Now, from where this salary base pay is getting, what to calculate? That is what we are learning today as part of my earnings. So let me open that earning code. So I am checking my salary base pay earning code. What is my eligibility condition? It is saying that it has to be in salaried compensation plan. Let's open this condition. What it says? Compensation plan as of sub period end date in selection salary. Okay, fair enough. If we go and check compensation plan, name is salary. So that is what we have in condition over here. Okay, so that is what we have in condition over here. Other than that, so my eligibility holds good. So my eligibility passes. Eligibility returns true. So now earning should resolve for Andrew. Okay, so this condition returns true. He is not on leave, he is active. So this will be true. His partner pay is not zero, his project base pay is not zero. So all four conditions returns true, and these conditions are end to each other. So he has to be in salaried plan. He has to have partner pay zero. He has to have project base pay zero. He has to be active and not on any kind of a leave where payroll effect is yes. So all holds good. He is eligible for earning to resolve. We are not focusing on formula. We will learn when we talk about calculations. Now, how it tells, if I keep on rolling back, I can see there is a place for compensation element, and the compensation element which is mapped to my earning code salary base pay is base pay. Now, where I can find this compensation element? So on under earning, I have a compensation element base pay. If I go to Ellison again, and if I click on this compensation plan, on my compensation plan, there is a compensation element field, and that compensation element field is having same value, base pay. So the common factor between comp plan and earnings code is compensation element. If we want to pull the amount correctly from correct compensation plan, we need to pick correct compensation element in our earnings code. Otherwise, we will not be able to get it. If I go back and let me edit this, I just take out this base pay. I saved my earning code. It is not allowing me. It is saying that calculation alert error. The entered information does not meet. So calculation work tag is creating problem for me. So let's not do that. Instead of base pay, but I don't think so. It is allowing me to save. It's an error in GMS. Okay. So I cannot edit this. But what I want to show you is if I take out that compensation element from here, if I wiped out compensation element from here, and if I try to recalculate, and if I go back to worker and I recalculate worker's result, system will not calculate salary because now the link is broken. Earning is not identifying from where to pull the dollar amount because we broke that link between earning and compensation plan. Is that answer, Shima, what you have a doubt before? So for every type of compensation earning, it is must to include the compensation element, because if you saw the earning template, there is no place where we include or where we tell what kind of a compensation plan it is. The only thing what we can define is compensation element. Now with this, if I say I am using same compensation element for more than one compensation plan, is it a good practice or bad? Just use your analytical knowledge and think through this. So let's assume that I'm using base pay for base pay salary, salary plan, and I'm using base pay for car allowance. If I want, I can go and I can do that. So let's go back to Ellison. I think Ellison was having the she's having allowance plan like tuition reimbursement. If I go and I edit this, so now I'm using base pay on car allowance and I am using base pay on salary. So system is not stopping me. So on my earning, I am mapping my earning salary base pay to comp element called base pay. Now this base pay on compensation plan side, it is getting mapped to two compensation plan. If my worker is having both the plans on their profile, what will happen? When I calculate my payroll and when payroll calculation engine try to calculate this particular earning, it will find that there are two plans assigned to employee, which means that system will calculate same earning twice. One for the salary plan and another time is for car allowance plan. So there are cases, because see, I don't want, if compensation is setting up mutually exclusive, which means that, let's take an example, that I have 10 incentive plan. Now, none of employee will be eligible to get one incentive plan at a time. That is how my policy is. So if my policy is saying that at any given point of time, employee should not get more than one incentive plan, that's fair enough. In this scenario, why I need to have a 10 different compensation element and 10 different earning code? First, if employee is not having more than one incentive plan, then I am safe. I can map same compensation element to all 10 incentive plan, because the employee will not have more than one incentive plan. So there is no danger of paying it twice. So when system get designed, you need to think of minimum configuration in order to achieve the maximum functionality. But with everything, there are pros and cons. You cannot configure or you cannot develop a system with rigid box. Otherwise, you will end up being in that box and you will lose the flexibility. So that is how Workday or any other ERP system is designed, Shima. So we cannot say, oh, why system is designed like that. System, because we don't need, here we made a mistake that we map same compensation element to salary plan and allowance plan. It's user error on my side. But we need to be vigilant and we need to educate our customer. We need to educate all our cross-functional teams, specifically com team, to tell them that do not use same compensation element for multiple plans unless the plans are mutually exclusive in terms of eligibility. That employee cannot get both the plans at any given point of time. Then you can go ahead and you can assign the same compensation element to 2 plans or 3 plans. But if employee can be eligible to get both the plans at the same time, then there will be a big no-no to have a same compensation element on 2 plans. Otherwise, on earning side, we end up paying double. And this is a very good trick question when you come to interview for payroll configuration. They normally they ask for it. And this shows that, I mean, you are experienced and you know the system in and out. You worked on it. Okay, so this is for connecting compensation plan to earnings. And as I said, allowance pay, allowance, one time, salary plan, incentive plan, bonus plan, all those are I mean connected in this way. We will look into other areas as we go further in earnings and deductions discussion. But right now, what I want to emphasize, or what I want to focus is how I can make a bridge between plan and earning. All right, let's get back to our slide. So we looked into compensation. Now, second set of earnings is benefit. So whenever I am setting up a benefit earning, which means that whenever I'm setting up a earning code which retrieves dollar amount or which retrieves value from benefit plan, then what special I need to do. And we saw that yesterday when we looked into short-term disability or LTD earning code. We will use the same example again here today. And I will look for short-term disability pay. I will open this up. This is my earning code. Again, on eligibility criteria, because I want this earning code to be calculated only if employees on short-term disability. If I missed on this eligibility condition, what will happen? This earning code will start coming out on active employees as well, because there is no condition or there is no eligibility rule which is getting evaluated or which is getting checked that employees on short-term disability or not. So whenever you are setting up an earning code, you need to be very, very vigilant and you need to be focused that you are setting up a worker eligibility correctly. Earning code or a deduction code need to be resolved or need to be calculated only when it has to be. You cannot calculate every single earning code for every single employee in our pay run. They should get the specific earning code only if they are eligible to get it. And that we can control with eligibility. Now, as we are talking about benefit, we looked into this calculation again yesterday. So we know that from where the base prorated is coming and how we are dividing that pay frequency factor. Base prorated amount is coming from benefit plan insurance coverage amount. Now this calculation is Workday owned condition or Workday owned calculation. So Workday provide us this calculation. And if you want to learn further, you can expand this from related action and you can read the comment, and this comment actually guides you that how or what value you are expecting for this calculation. So it says that return the numeric value of benefit plan coverage amount for the benefit plan associated with the deduction. So what benefit plan is associated with this earning? These benefit plans. So workers should have these benefit plans on their benefit election. And when they elect or system calculated what is their coverage amount. And that coverage amount is coming into our calculation formula. And that coverage amount tells us that what dollar employee will get as short-term disability. Now, if I want to check that who is part of this benefit, how can I do that? Because I am smart and I know benefit, I will go and I will run benefit census report. which typically gives me every single benefit election. Now I am not sure which benefit group I should pick. So I will go and I will look for United States. There is nothing like that. Let's see. Okay. I think this is the one because Ellison is salaried employee and she is in this. And if I want to check, okay, let's run for it. This report is going to run for few minutes because it is going through every single employee and it is pulling every single employee benefit election. But that was fast. That's good. Now I can go and I can search for benefit plan. So benefit provider is here. Okay, I got it. 75% of the salary. So let's pick this employee who is first on our list. He is, oh, Logan is in it. Okay, that's good. So let's go to Logan's profile, go to her benefit section, and let's see. But all these are not giving me what I'm looking for. I will go to benefit election history and I will pick something effective as of 2019. So I pick the open enrollment event for 2019 and I am scroll down just to check that what she's having. Health savings, spending, no, insurance coverage. So insurance coverage, short-term disability, and calculated coverage amount for her is this. So this is the amount what that calculation on my earning is going to pick up. And this amount is getting divided by pay frequency because Logan is under monthly pay frequency. So this amount is going to get divided by 12. If this plan and this amount is elected on Ellison or Betty, who are in semi-monthly frequency, then the amount will get divided by 24. And whatever the result comes, that is your short-term disability earning. So key part or the main thing what we need to observe here is how we linked benefit plan with earning. It is relatively easy as compared to compensation because we need to just put the benefit plan over here. But by putting benefit plan doesn't create a linkage. We need to pick correct field into our calculation. Then only we will be able to pull the amount what we are looking for. I will take a pause. And again, there is no way I can teach you 500 fields which are delivered by Workday. It comes with the practice. I can show you how to look for benefit field. If you are looking for benefit interacting field, you need to look for benefit column and then you can get it. For example, if I go and edit, and instead of this, if I want to use any other field, I can go and I know that I am looking for something related to benefit plan. So what I will do, I will look for keyword benefit and it will give me laundry list of fields. If I know what I'm looking for, I can search. If I'm in seasoned configurator, I know what field I'm looking for. I can explicitly search for it. For example, like I know that I am looking for pre-tax, benefit pre-tax cost. I will type in and I get benefit employee cost pre-tax. If I'm looking for employer cost, I can go and I can say, okay, I am looking for employer cost and I can grab that field. But how do I know what need to be get? One thing is that your benefit consultant tell us that what field he or she configured on benefit plan side, which you are looking for. Or if you don't want to go and bug your benefit consultant and you know yourself benefit a bit, you can go to benefit plan and you can click on I can pull up again my short-term disability plan, that is Liberty Mutual. So I pick the benefit provider and all available plans are listed here. I will open that specific plan for short-term disability employee. So this is my benefit, how my benefit plan look like. In this benefit plan, I can go and I can look for insurance coverage. I can look for insurance coverage where it says 75%. So this is not telling me field name. I will keep digging further. Insurance rate. Okay, that is what I'm looking for. So let's go and click on this. It says employee cost is 850 and employer cost is 800. So this is not I'm looking for. I'm looking for coverage amount. So from benefit plan, I'm not able to get what coverage amount. Then my second avenue to get this information is run the benefit census report and look for the employee who are enrolled in that plan and try to see that that report is giving me what I'm looking for. And in our case, from benefit census, I got that detail that employees coverage amount is 175 or something. Yep, 75% of salary. So I got it from there. I mean, from here, I got that who is enrolled into it. I went to employees profile. I dig in further to get the election effective as of 1/1/2019. And from that election, I got that what amount I'm looking for. So there are multiple ways to, look into data, zero down on what field we want to bring in, and then search for that field in your earnings configuration. And then unit test and see that it is working on 2-3 employees. Okay. So again, I am recapping. If I want to use benefit plan in my earning, then first thing I need to do is I need to select that benefit plan on my earnings. And then second thing is that in my calculation rule or in my calculation formula, I need to pull in correct field which is holding the dollar amount or which I need in my calculation formula. Third category is time off. Now, if I want to build an earning code where I need to pull the time off hours, like workers paid time away from work, I need to pull those hours and then I need to apply, rate or multiply those hours with their hourly rate and get the dollar amount or to get the amount I want to pay. How can I do that? Again, same thing. Let's go to tenant and look for earning code paid time off. Paid time off. They are payouts. No, I don't want this. So I want to create an earning code to calculate paid time off. Now, in order to me to calculate, what I can do is, because it's not there, I will go and I will create earning and I will name this earning as paid time off. Code will be paid time off. Okay. Country USA. Effective from 1/1/2000. Run category regular. A group eligibility I don't want to put in. Worker eligibility, yes, I want to put in because I don't want this to be calculated every single time. So what I will do is I will create a condition and that condition is instance set compare and I will say paid time off paid is not equal to 0. Category is payroll, and I will look for paid time off so constant value. So we need to pick value compare, use same category payroll, and let's search for paid. Time of paid is not equal to 0. This is going to be my condition, and then my calculation will be hours time rate, hours unprorated rate, input allowed, frequency should be hourly because I want to multiply with hourly rate, and I need to feed that from where my hours are coming. So when there is an absence event, so I pick the absence calculation. So this is absence component related calculation. So whenever Betty Lou or someone is requesting a time off, if it is a paid time off, then this field will hold the value how many hours she requested. So I'm grabbing those hours from here and feeding to hours unprorated. Similarly, for rate, I'm saying that pick up a rate from compensation element PC frequency override. So pick up a rate which is assigned to compensation plan, and from compensation plan, if I need to grab rate, I need to use the compensation element. So I am using compensation element. Compensation element, I need to use salary base pay, or it is base, yeah, it's base pay. So base pay, so it will pick the value from salary plan. I will de-annualize that annual rate into hourly rate, and I'm multiplying that hourly rate with hours which I am going to put into absence request. And because this is earning to be taxed, I need to pick add to gross because I want this amount to get and add to gross. Similarly, I want this to be federal taxable. So federal taxable, state taxable. So state taxable, local taxable. It is local taxable, employee and employer both, if there are, based on locality. Then I want this to be SUI, FUI, what else? FICA. Then this is periodic earning. So it has to go into my disposable earning calculation. So this is withholding order periodic earning. Okay. So I put all the tax buckets so that it will, go in my taxable wages and employee will be taxed for it. It is not coming from benefits. So I will keep this section blank. It is not, configuring this for USA. So I am not going to configure anything under ROE because this is for Canada. Again, I will go to my effective dated. I say that I want this earning to be calculated on my regular run category and calculate only if it is paid time off hours are there or payroll input is there. I just want this as an ability for payroll administrator in case if they want to load anything, if system is not performing the way it should. Then I define my calculation rule, that is hours time rate. Hours are coming from absence, rate is coming from compensation. So my earning looks good. Let's save this. And I want to request paid time off for her in a period which is open for us. So what period is open for us? 116 to 131 is open for us. So let's go to time and request absence. We'll go here. We'll say add absence. And where we want to go? January of 2019. So I will say go to January of 2019. And let me check one calendar. So 16 period is open from 16. So let's request 17, 17, and type is what? Vacation time. So it should be vacation hours. So vacation hours, next 8 hours, submit. Okay, request has been submitted. I just want to check that this is approved and it is not pending for any approval. So I will go to Betty Lou. I will go to her job. I will pull her worker history. I want to check on time off and leave. So I will click on history by category, time off and leave. And then in time off and leave, I see that this is successfully completed. If I want to further check, I can click on business process and overall status is completed. You can go to process and you can check the status. Everything is completed. So her request is in system now, which means that I can go to Betty Lou and let's calculate her payroll for that period in which we put the absence request. We saw paid time off. She is splitting her time between California and Oregon. That is the reason why that amount is getting split between two states. But I can see that my earning is getting calculated. Now, if I want to see more details, what I can do is I can go here and I can edit my earning, because it is not showing that how many hours and at what rate this multiplication is happening. And if I want to see those details, what we can do is we can go to this grid where we have hours and rate, scroll all the way to the right, and then there is display current. Let's check on it, hit OK, hit done, and let's go to Betty again. So I am in Betty Lou. I will go to her payroll. I will open her pay result. Let me scroll down. Now on my paid time off, I can see hours between two states. It is 8 hours. That is what she requested. And her rate is $68.69 or $68.70. If we want to verify that, we can go to her salary as of 2019. Again, if I go to compensation, I can see her annual salary, but the annual salary I'm checking is effective as of 4/1. So to get her old salary, we can go to pay change history. And from pay change history, I can get her old salary, that is 142,889. If I go to 142,889, 142,889, you can see my calculator, right? So what I'm doing, I'm dividing 142,889 by 2080. Because she is scheduled to work 40 hours every week. 40 hours, 52 week is 2080. So when I divide that, I'm getting that hourly rate of $68.69 or $68.70. That is what we saw in our payroll calculation. So it is working. Now, only thing, what it is doing, I forgot one thing. Can anyone of you point out that to me? When we are paying her time away from work, we didn't reduce her regular salary. She's still getting the regular salary she was getting before we pay her vacation time. So whenever our customer asks us that, okay, we want earning code for vacation, we want earning code for bereavement, or we want earning code for jury duty, whatever amount or whatever hours we are paying them on these earnings, we need to reduce their regular salary by that amount or by that many hours. Otherwise, we end up paying double for those hours what employee is taking out as an absence. Agree? So that is what I missed. I just created earning, but I didn't do anything to reduce my base salary. You need to adjust for hourly in scenario where your customer is paying your hourly employee auto pay. So nowadays, I mean, there is a trend that you are not holding your hourly employee salary until they put the time in timesheet. I saw a lot of customer, they are just flat out, they are paying their scheduled hours upfront. And then when they put their time into timesheet, if they are putting less time, they are docking their, or they are doing a recovery on hours they are putting less in next pay period. If that is the scenario, then yes, you need to reduce the salary, because when you are doing auto pay, you need to reduce that auto pay by the amount they are taking out as absence. But if you are not doing auto pay, then for non-exempt, there is no need to worry for reduction. You need to just worry to reduce the salary for exempt people, that employee paying upfront. But if employee is not putting, sorry, employer is paying upfront, but if employee is not putting hours, sufficient hours in timesheet, then when we do a retro calculation, then retro will say, okay, you paid $5,000, but now when I'm calculating based on the hours in timesheet, employee should get $4,600, which means that we overpay employee $400. So there will be a negative 400 created, and that will be recovery on next check. There is already a reduction amount here. So what this reduction amount is saying, let's go quickly and check. It's just a related calculation. So it is just a variable. Now let's see what reduction amount is coming from. So reduction amount is coming from hours not worked times calculated hourly rate. So the logic is already built in. Do I have my ACRC? I don't have. So what I need to do, I need to go ahead here, edit this aggregated calculation, and I need to put that vacation time, sorry, vacation USA time off paid, the one which I used in my calculation, salaried one. So I use this. Now this is going as time not worked, and this is getting multiplied by calculated by hourly rate. So now reduction will happen. Now let's go and clean up Betty Lou little bit so that we will get that out. So I will go and I will take out all this payroll input, what we processed for her. I don't want any one of them. Also, I don't want Betty Lou to split her time or split her taxes. So what I will go. So I cleaned everything. Now let's go and recalculate her. Okay. So now we are getting holiday pay. We are getting, oh, they already have this earning code. We were searching, but we were not able to get it. So vacation paid is the earning code, what they have, and paid time off is the earning code, what we made. So if you see, the number is same. The only difference of 2 cents is because here they are rounding to 2 decimal places. And in my case, I am not rounding at all. So if I do the same thing, rounding at 2 decimal places, I will end up getting the same thing. So now salary base pay is getting reduced by the number of hours we are putting as paid. So reduction is now happening. If we take out, let's go and take out that time off from her so that we can get her full salary plus the holiday. So I will go quickly. I can go to her time off request, and let me cancel that. So we put one for 17. I will go and open this. cancel this. So now this is wipe out from here. So there is no vacation. Let's recalculate now. Vacation is gone. This is how we can configure earning, and we can pull the absence hours in it. We learn compensation, we learn benefit, we learn time off. Similarly, there is earning to pull the hours from time tracking. Let's quickly see one example. The most common example is overtime. Overtime hourly 1x. Let's see this. So this is straight time basically. So in straight time, what they are doing, couple of things we need to remember. First is we need to put a condition that resolve this earning only if you have a approved time entry for that sub period or for that pay period. And if employee is in hourly plan or if employee is in exceptional hourly plan, then only calculate. The reason why we need to put this condition is that, again, fundamental is same. We don't want this earning code to be resolved for everyone. We just want this earning code to be come out for people who either entered their time and their entered time is approved. Then only yes, I want to calculate earning. If they don't enter time, I don't want to calculate earning. So this condition is a Workday delivered condition. If you want to see, you can check that. It's a delivered Workday condition which says that calculate the earning if there is approved timesheet exist. Again, calculation formula is same. Hours time rate. Rate will come from compensation plan. Hours will come from timesheet. Against hours, we are using again pre-delivered condition, which is saying timesheet approved hour for earning. Now, what approved hours for earning? Let's take an example that employee is having overtime hours. Employee is having straight time hours. Employee is having regular hour. Employee is having shift hours. With this condition, basically we are pulling every single approved hour in the pay period. But this earning is looking for all kind of time. No, this earning is looking for only straight time, where we can define that straight time hours are only need to be pulled. If I scroll little down, there is a time calculation tag which says overtime. This time calculation tag is coming from time entry. So whenever employee is requesting a time, on that time block, time tracking calculation attach a time calculation tag, and that time calculation tag we are pulling in our earning. So in combination of time calculation tag and this total time approved, it defines that out of all the approved hours, what approved hours I need to accumulate and I need to pull into this earning. So if I have 4 types of hours, no matter what hours I want, which are attached with a calculation tag called overtime, bring only those hours. Those hours are bring in here. We know that our rate is coming from compensation and our formula is hours time rate. So if employee is having a over straight time hours of 8 hours, those 8 hours are getting multiplied by their hourly rate and we are calculating earning. So time tracking earnings are relatively easy. All of them will have hours time rate. The only thing what is going to change is calculation tag. If we are building straight time, we need to pull straight time calculation tag. If we are building overtime, we need to pull overtime calculation tag. Let's quickly check another one, which is overtime 1.5. That will give some idea. Shift differential evening. The only thing is shift differential evening. Other than that, your formula is same, prorated into rate. Your rate is 1 because shift premium evening is $1. That's why we hard coded rate as 1. If it is equal, if requirement is that hours time hourly rate, then you will see the same thing. It will come from compensation plan. So in case of time tracking earning, the only thing you need to remember is that you need to map calculation tag. And if we are pulling rate from compensation plan, then we are expecting compensation element on it as well. In this case, your rate is hard coded. That's the reason why compensation element is not here. But if we go back to our overtime, we are saying hours time rate, and rate is coming from compensation plan. So we need to pull the compensation element. Otherwise, calculation is not going to work. Now, last set of earning is payroll input. Now, payroll input is straightforward. Inputs are not coming from anywhere. These are the earnings, or these are the deductions which need to be loaded directly into pay line. When I'm saying need to be deducted and need to be entered directly into pay line, let's take an example of United Way deduction. Now, United Way deduction, it's a voluntary deduction on employee's part. I'm opting for $50 per paycheck. Anwar is opting for $25 per check. There is nothing, there is nowhere in system we are maintaining this. So what we will have is that on my pay line, I will set United Way as ongoing deduction with $50 per pay period. Similarly, for Anwar, there will be a payroll input entry which will say that deduct United Way $25 ongoing basis from start date this to end date this. Let's quickly see that in how we can do that. So I will pick someone, or let's pick Betty. So how can I do that? I can go to pay tab or pay profile, and there is something called input. Go to input. I will add, and I will say that for year of 2019, start date from here to end date from here, I want United Way. Here you go. It's ongoing deduction because it cut across multiple pay period. So I need to pick ongoing. I want this to be coming out of regular run category only. I can click on OK. It will ask me what I need to do. I will say amount $50. And then let's hit OK. When we add this, it will start appearing on her profile. Let's go to results. Let's recalculate. Let's see. Do we have? Here you go. United Way, $50 coming out. If I go and I see payroll input tab, I can see starting from here, ending here, it's ongoing deduction, and amount is $50. And who entered that? Logan McNeil entered that. So if this is what we need, then there is no calculation required. We just simply define my calculation formula is payroll input, because that is how I'm going to enter it. So no connections need to be made on compensation element. No connection has to be made on calculation tag. No connection has to be made on benefit plan. It is simple payroll input, and that's it. The only eligibility condition we need to worry about is to put that if payroll input exists, then only calculate. Otherwise, don't.
All right, let's test your knowledge. Here's a question for you. What configuration helps control which pay components are processed during a specific payroll run in Workday? Option A, pay groups. Option B, payroll calculation types. Option C, payroll schedules. Option D, payment elections. Take a moment to think, and when you're ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck. Type the correct answer in the comments section. Hi everyone, I'm excited to give you a preview of ZaranTech's Expert Workday Payroll Training course. In this intensive program, we'll explore Workday Payroll's key capabilities so you can optimize payroll processes and compliance. Whether you're new to Workday Payroll or an experienced user looking to expand your skills, this training delivers tremendous value. We'll cover the fundamentals: setting up payroll, managing pay groups, understanding calculation logic, and producing payroll reports. ZaranTech has trained hundreds of Workday payroll experts globally. Our real-world customer examples will empower you to streamline payroll operations and stay compliant. This is an outstanding opportunity to become a certified Workday Payroll expert. Visit the link below for full information on ZaranTech's intensive Workday Payroll training program. Thank you.
This topic covers what is the earnings, what kind of information earnings pull, how we can, what kind of information is required when we are pulling or when we are making connections between different functional areas with earnings. Now we will continue our discussion. We will continue learning, or we will continue looking into how we can configure earning when we are configuring or when we are defining earning, what each field means to it, what is the functionality we can achieve with the values we are going to configure on fields while configuring earnings. So that is going to be our plan for today. Hopefully we will be able to complete this topic. We will start with calculation engine, different type of calculation, and then we will get some hands-on or some actual tenant time, create earnings. So now on create earning, or whenever I am creating any earning, there are three main section of earning. First is general information, where we define what is my earning name, what country it belongs to, what is earning code, what is what is earning code and all that. Then it comes effective dated information. So effective dated information is whenever we add a new effective dated row, we have an ability to say that this information on earnings is effective from this date to the next effective date. If there is any change in criteria or if there is any change in calculation, then we normally add a new effective dated row and then we maintain new version of it. On effective dated row, what actually comes? So on effective dated row, criteria or worker eligibility comes, run category eligibility comes, pay group eligibility comes, then calculation comes, how we are defining that calculation, what are the related calculations under that calculation, what calculations we are mapping to those related calculation. We can control that. Do we need an input ability on those related calculation, or do we want to display them, or do we want to display and store them? So all different kind of things we can maintain, or we can put the values on effective dated. Last but not the least is the non-effective dated configuration. So the second tab on that earnings definition is non-effective dated. And on non-effective dated, the information what we put is pay component groups, benefit plans, ROE, costing allocation. Yep, that's all. So now let's start looking into earnings definition. So before we go into, okay, so next is deduction. So before we get into deduction, so the information which I'm highlighting is general information. And then we have effective dated tab and we have non-effective dated tab. So on general information, what I can maintain, I can say this is my, and I want to code this as B bonus incidental 202. So I can type on payslip. Do I want to show something else? If I keep this field blank, then on payslip I will see what I mentioned as a name. But I don't want on payslip, I don't want to show bonus incidental, but I want to show just bonus. So I can put default payslip name. Now I can define that this earning is specific to United States. If there is any comment I want to put, I can put it like bonus in C. Effective date. From which date I want this earning to be effective? I say, let me use 1/1/2000. If this earning by any reason, if this earning goes inactive, we can check this box. Is this earning need any eligibility in terms of run category? Yes, I want this earning to come out only on bonus run category, not on regular. So I will put that. Pay group, is there any specific pay group gets that? I can say USA bi-weekly, quarterly, that is the pay group which is eligible to get this bonus. On worker eligibility, what I will say that if employee is having, I want to say if employee is in management level 1 or 5, they are eligible to get. And also, if there is any payroll input loaded for this particular pay component, then I want this earning to be resolved. So now this earning to be calculated and resolved requires 4 criteria or 4 eligibility rules to be satisfied. First, run category has to be bonus, pay group has to be USA bi-weekly, and then these 2 conditions which are on different row, they are OR to each other. So management level is 1 to 5, or this pay component is loaded as payroll input. If any one of these is true, then earning will come out. But if both of them are false, earning will not come out. But these 2 conditions, the run category and pay group, they are end to what you are mentioning under worker eligibility. So bonus, run category, and US bi-weekly and management level 1 to 5. If all these 3 conditions satisfies, then only this particular earning will come out on worker's paycheck. Scheduling. Now, I want that if first pay period of year, first pay period year, let me search. No, it's not there. Annual first. Let's see. Yep, I got that. So it says that schedule this earning, but I don't like this. So what I would say, payment date. Yep. So if my payment day month is January, then only pay this out. But if my payment date month is other than January, don't pay that out. But if there is no scheduling requirement, I want this earning to come out no matter what. It is of January, February, March, April. I don't care. I want this to come out as and when there is a payroll input for this, or there is a compensation plan or compensation payment process for this allowance plan. But I just want to highlight that there is an ability that you can restrict or you can schedule that on what pay period you want this particular earning or this particular deduction to come out. Now, what is the formula for calculation? So again, I will ask myself question. From where I'm getting this bonus? Is it coming from compensation plan? If yes, then my compensation calculation will be compensation element PC frequency override, no rounding. I will use this. And what this do? So it says that compensation element which is associated with compensation plan, pull the amount against that compensation plan and de-annualize the amount based on what is the frequency of my pay cycle. Now here, our pay group is bi-weekly, quarterly. So that means our pay frequency is quarterly in this case. Do I want amount to be override directly when I'm loading payroll input? Yes, I want that ability. Do I want to override frequency? I need to, but first before I select that, okay, do I need to override or not? What I will do on safer side, I will say, okay, override at quarterly. Now, is there any proration? So proration is prorate based on days worked, prorate based on calendar days, prorate using annual working days, and none of the above. None of the above means no proration. Now, what is difference between 3? Prorate using days worked mean prorate based on number of days. So if we are talking about bi-weekly pay frequency. So we have 2 weeks. In 2 weeks, how many working days are there? 10. If employee is hired on second week's Tuesday, what will be employee's proration factor? So what system will do? Okay, employee hired on Tuesday of second week. It means that employee is active for Tuesday, Wednesday, Thursday, and Friday. 4 days in a pay period which has 10 working days. So proration factor will be 4/10. If I select this option, if I select second option, then employee will be active for Tuesday, Wednesday, Thursday, Friday, Saturday, because my next period is going to start from Sunday. So employee is active for 5 days out of 14. So my proration factor is 5/14. Third is based on annual days, because I mean it is a global in nature. So in most of the offices it is Monday to Friday. In some cases it is Monday to Saturday. So there are, or in some cases in Europe it is Monday to Thursday. So based on that, we define that how many working days we have for a company, and that will be used as a criteria to prorate. So if we say there are 252 days in an year which are working days, then what we need is we need to calculate that how many days employee, or system will calculate how many days employee is active in an year out of 252 working days, and the proration factor will be number of days employee active divided by total number of annual working days, that is 252. So this is the way how the proration works. Calendar days is by calendar month, calendar days on a calendar. So in case of bi-weekly, if employee is getting hired on Tuesday of second week, then how many days employee active by calendar? Tuesday, Wednesday, Thursday, Friday, and Saturday. 5 days out of 14 days. So proration factor is 5/14. What it says? Prorate using calendar days. Calendar. When we see the calendar, we still see Saturdays, Sundays, and public holidays on it. When I say work days means Monday to Friday. Now again, Monday to Friday is not applicable for everyone. If I am working in Walmart, my work week is Wednesday to Sunday. So in that case, Saturday, Sundays are my work days. We define that how many annual days worked we want to be considered. So as I said, 52 weeks are working, total number of weeks in a year are 52 weeks. Normally we go by 5 days in 1 week. So that is 52 into 5, that is 260. So I say my company work 260 days in an year. So annually number of work days for my company is 260. So when I am prorating using third option, it will take 260 in denominator, and then based on when I am hired, when employee got terminated, it calculates how many days employee was active in an year out of 260 working days. So that factor will be used as a proration factor for prorating. Now, event causing pay component proration. So what event actually causes proration for calculation? So if my compensation change, employee got increase in middle of pay period, then what system will do? System will prorate the amount, because system will then divide the total pay period into two segments, or I will say into two groups. First is first segment is with old salary, and second segment is with new salary. How many days employee was active with old salary? Prorate that based on number of days. How many days employee is active or was active with new salary? Prorate that period with new salary. So if I take an example, my biweekly salary is 5,000 in the beginning of the pay period. Now in middle of pay period, I got an increase, and now my biweekly salary is 6,000. What will be my regular salary I end up getting in pay cycle? So I got 5,000 for first week, and my salary is 6,000 for second week. In first week, I was active for 5 days out of 10 working days. In second part of our second week, Again, I am active 5 days out of 10 working days in that pay period. So when proration will happen, system will prorate first week. Out of 5,000, my proration factor is 5 days out of 10. So that is half of it. So I will get salary 2,500 for first week and 3,000 for second week. So for a period, I end up getting a total salary of 2,500 plus 3,000, that is 5,500. But I need to say that whenever there is a compensation change, I want system to do the proration. Similarly, whenever there is a leave of absence event, like employee is going on leave or coming back on leave. When employee is going on leave, what it translates? It actually changed the employee's HR status. Employee is active while employee is not on leave. But the moment employees start their leave, the status changes from active to on leave, which means that if I don't mention the criteria on a run category for that on leave or that leave type, payroll will say, I am not going to pay it because there is nothing mentioned on a run category to tell system or tell payroll calculation engine what to calculate and what not to calculate. If nothing is there, system will consider nothing to calculate. So it is very important that we need to mention pay component group or pay component along with leave types to tell the calculation engine that whenever employees start their leave, I want which earnings to be calculated for them. In proration, you need to remember two things. First, the proration rule. We cannot make this call on our own that I want to consider the days worked, I want to consider calendar day work, or I want to consider the proration based on annual number of days worked. We need to ask our customer and we need to understand how they are prorating. Now, proration is different for non-exempt and proration is different for exempt. Whatever we are doing here is for exempt because we are paying them for a period. So I am not calculating their hourly rate and on a daily basis, I am not multiplying their number of hours for that day into their hourly rate. No, I'm not doing that. What I'm doing is for an exempt, their annual salary is X dollar. I'm taking that X dollar and then I am dividing that X dollar by number of pay period in year. That is how I am deriving that what employees salary for that pay period. In case of non-exempt, if they put hours in time tracking, they will get salary paid. So it's simple, hours time rate, no brainer. If they are on leave, if they are not working, they are terminated, they are yet to be started. On the day they don't put hours, payroll say, okay, there are no hours, no dollar amount. So when you are discussing proration, always understand from customer what rule they are following. Now, gross up calculation. If my earning happen to be a gross up earning, I can check this box that I want to gross up. And when I am putting a gross up, do I want to gross up for all taxes or there is a specific percentage that gross up 10% or gross up 20%, or I want to gross up just for FICA, or I want to gross up for FICA and federal, or I want to gross up for FICA, federal and state. So in first case, if employee is having federal, FICA, state and local, every single tax is getting included when we are grossing up. In second option, the gross up amount will be calculated based on the percentage what we are mentioning. In third case, the gross up amount will be the tax which is going under FICA. In fourth, the gross up amount will be the tax amount which is going under FICA and federal. And in fifth, the gross up amount will be equal to FICA, federal and state withholding. So again, not every single earning is gross up. There are certain cases where employer is taking this liability of paying taxes on behalf of employee. In such cases, we need to gross up. So that if I promise my employee that, okay, you will get $500 in net, that means that I'm saying that whatever taxes are going to incurred on this $500, I am going to pay that out. You will get your $500 what I promised. So if on the $500, if federal tax comes out to be $20, state tax comes out to be $10, social and Medicare comes out to be $8, and local comes out to be $4. So altogether it is 20 for federal, 10 for state, 8 for FICA, that is 38, $2 for local, that is $40. So I need to add those $40 to employees $500 and pay out $540 to employee, so that the $40 tax which is coming out of this 500, I am paying that out on behalf of employee. It is not coming out from employees $500. This is called gross up concept. Okay, now this checkbox, now it is double negative. So just pay attention on what is label of this field. Do not recalculate during retro, which means if I check this box, what it says, exclude the earning when retro calculation is running. If I have a earning code which I don't want to be considered when we are doing retro, I need to check this box. But if my intention is that if there is any retroactive change for this earning, yes, please consider, then don't check this box. Otherwise, the earning will drop or earning will get skipped from retro calculation. Okay. Now, FLSA or flat sum bonus. So in case of FLSA, there are certain earnings which are FLSA eligible. Before I go into detail, let me ask class, do you know FLSA concept?
No.
How about Anwar and Shima? There are two folds to it. First is minimum wages, yes, but there is something called FLSA premium when we are paying overtime. Okay, no matter. So let me explain what is the rule. So the rule says that if whatever earnings I'm making in that pay period in which overtime is coming out, by rule, I need to pay. So overtime is 1.5 times. So in that 1.5 times, straight time, that is 1 times, I need to pay at the hourly rate. But remaining 0.5 times, I need to pay at a premium wages. And how I get that premium wages? Whatever earning code I have on paycheck in that pay period, I need to take that dollar number and I need to divide that dollar number by number of hours I worked in that pay period. And by using this math, dollar divided by hours, I get a new or I get a premium hourly rate. And that premium hourly rate divided by 2 is what I need to multiply to my overtime hours to get that 0.5x. Whenever we are configuring all our earnings, we need to mention that do this earning is FLSA eligible or not. The common example is I am in a pay period where I have overtime as well as I got the retention bonus and I got sign-on bonus. Sorry, both cannot be possible. So I got retention bonus. My hourly rate is $50 per hour and I end up working 40 hours of regular and 10 hours of overtime. If FLSA is not there, what amount I am expecting to come out? $40 of regular times 50, that is $2,000 is my regular salary. 10 hours of overtime, that is $10, 10 hours multiplied by 50 into 1.5, that is $75. So I end up getting $750 for my overtime. And then I am saying that I got $5,000 as retention bonus. So altogether, if FLSA is not there, what is my gross amount for the pay period? It is $2,000 of regular, $750 of overtime, and $5,000 of retention bonus. So altogether it is So 7,750 is my dollar amount. Now, because my company implemented FLSA and they are FLSA compliant, the calculation will work like this. Retention bonus is FLSA eligible. So I got 5,000 as a retention bonus. I got $2,000 as my regular salary. And I got straight time, that is 10 hours into $50. That is $500 as my straight time out of that overtime piece. So altogether, $7,000, not 7,000, how much it is? 5,000 plus 2, 7,500 on top of it. $7,500 I got. Those $7,500 I need to divide it by worked hour in that period. And my worked hours are 40 hours of regular, 10 hours of overtime. That is 50 hours I worked. If I divide 7,500 by 50, my new hourly rate will be 750 by 5, $125 per hour. I divide this $125 by 2. So my premium rate is now 62.5. $62.50 is what I'm going to multiply to 10 hours of overtime, which gives me $620.50. So 7,500 I got from there, and my overtime generate me 620 more. So now I am end up getting $8,120. So without FLSA, I was getting 7,750, but with FLSA, I am getting $8,120.50. If retention bonus is not there, then my premium rate will be 2,000 of regular, 1,000 of overtime straight, and 3,000 divided by 50 is 60. So 60 divided by 2 is $30. So $30 is getting multiplied to 10 hours, so $300. This is how FLSA works. So the key part or the thing what I want to highlight here is whenever we are configuring any earning code, we need to ask our customer that is this earning is FLSA eligible or not. If they say yes, then we need to check the box. If they say no, we uncheck the box. Okay. Now some bonuses are spread or some bonuses are paid for a period of time we worked. Now, common examples are commission. Commissions are not generating in a period. I get commission for a quarter, which means that all the pay periods which are falling in that quarter, if whatever I worked in that quarter, that leads me to get a commission. So when I'm including this amount into FLSA calculation, I cannot just include the whole amount in one pay period. I need to split the whole amount over the period of time, which leads me or the payment is meant for. If we talk about annual incentive is not just for that one pay period. Annual incentive is for the full year you worked and you got eligibility for that bonus. So again, we will ask our customer, this particular earning is a bonus earning. Is this bonus need to be split over a period of time, or this bonus is considered to be generated out of one pay period? If answer is first, that it has to be split over a period of time, then we can put allow coverage date for bonus, and we can say that paid on FLSA hours or paid on all period or paid on active periods or paid on active periods minus amount reduced by inactive period. Now they are very self-explanatory. How? If employee is active throughout the period, then the whole amount will get spread across every single period which falls in the coverage dates. And coverage date is start coverage date, end coverage date. So between that, all the periods, because employee was active, so employee's amount will get split. If employee happened to be inactive in any one of the period or for partial period, that amount get reduced from the amount from active period. And then we know that, okay, out of 6 months, employee was active just for 4 months. So I need to split the bonus for 4 months only, not for 6 months. So based on that, I mean, we can see. And again, our customer will tell us that what rule they are following. So we will pick that rule for them. If employee work on multiple state, like all this cross-border scenario where employee stays in one, or I would say not cross-border, but employee work in multiple state. Take an example of consultants who work on 2 projects, one in one state, another one in another state. So what is expected out of them? Their salary need to be split so that they will get taxed accordingly in a state they are spending time. So if I am working in state of New York and I am working in state of Connecticut, what is expected? The amount of time I am spending in New York should be taxed by New York state. An amount of time I am working in Connecticut will be taxed by Connecticut state. If the division of my hours is fixed, saying 50% of the time I work in Connecticut, 50% of the time I work in New York, then I need to put that tax allocation in my election. And then based on that, the earning what is coming out under this earning code gets split based on the ratio, how we want to split our taxes. So if I'm making $5,000 under this earning code and my split is 50-50, then I will get taxed for 2,500 in New York and I will get taxed for remaining 2,500 in Connecticut. So if that's the case, that is how we want to do it. Then we can say in case of multi, we will keep it unchecked. But in case of multi-state, I work for 2 states, but still I don't want to split this earning code because this earning code is not applicable to be split and taxed in 2 states. I will check this box. If I check this box, then the dollar amount, what I am earning under this earning code will go against my primary state or against my work state. Calculation tag. Now, this is a very important concept. You may not come across, but the places where employee can hold concurrent positions, like if I am a doctor, and let's take an example of healthcare. So I am a doctor and I play department head, role of department head, and also I played a role of ICU specialist. If I play both the roles, and the deal is the compensation for both the roles is different. For department head, my compensation is different, and I'm playing 20% times I'm playing that role. Remaining 80% times I'm playing a role of ICU surgeon, and my compensation is different for that. When I'm calculating this bonus, I'm saying that this bonus is applicable only to ICU surgeon, which means that whenever I'm running a payroll, the salary or the paycheck I'm calculating for department head should not have bonus resolved on it. The bonus should result when I'm running a pay calculation for my other position. So in such cases, we need to put work tag. And this work tags may be a custom work tag, or it may be a financial work tag, what we enabled at a tenant level. And if I want this work tag to be loaded when I'm doing a payroll input, I need to check this box saying include input. If I don't uncheck this box, then there is no ability when you are doing a payroll input. You can specify that this particular earning is going against which position of an employee. It will go by default to the primary position of an employee. And this is very important, especially when you are dealing with non-exempt employee who play or who holds concurrent job, because doing one kind of a job, they have a different hourly rate. Doing another kind of a job, they have a different hourly rate. And when they are putting their time into time sheet, they are specifying that I worked 4 hours on position 1, I worked 4 hours on position 2, which means that when payroll runs, expectation is that position 1 will get multiplied to hourly rate tied to it. Position 2 hours will get multiplied to a compensation rate or hourly rate, which is tied to that position. In that scenario, if you haven't enabled your earning for position, then you will not be able to calculate it correctly. Then there is a section for holiday pay. This is very specific to UK, because in UK there is a requirement for statutory holiday pay. And this configuration is, or this checkbox is making it enable or split the number by that functionality. Now related calculation, we check that on my calculation formula, if I say that my calculation is hours time rate, then it is not going, I mean the system is not, or the calculation engine is not magically understand that from where I get hours, from where I get rate. We need to define, or we need to do a mapping that hours will come from which place and rate will come from which place. If you remember, we saw in case of STD, we saw that the amount is coming from benefit, and then the other one is coming from compensation. In this case, I'm saying that rate will come from compensation. So rate, and then I will put another row and I will say hours and prorated. And it is very important that whatever you are picking here, they should be the same which is used in the calculation formula. So if sometime calculation formulas are very generic in nature, so the best thing is you need to open that calculation and you can see both the operands. Operand A1 is hours unprorated, operand 2 is rate. And that is what I have in formula, and that is what I put as a related calculation. And then what I'm saying, hours are coming as payroll input, which means that I need to load payroll input hours. But if that's not the case, I will say hours will come from timesheet approved hours. Here you go. And rate will come from compensation element. So I will mention that compensation element PC frequency override rate, no rounding. It is coming from here. But again, by putting these calculations are not going to work. If it is a timesheet, we need to tell what time calculation tag I need to pull hours for. I can put overtime. If it is compensation, I need to say what compensation element I need to pick so that I can have a bridge between compensation plan and earnings code. With calculation tag, I have a bridge from time tracking hour to earning code. So based on my calculation formula, I need to know that what is the source for those operands, or what is the source for these related calculation. And based on that, you can use the generic thing. Trust me, there are not too many. For benefit, we have standard calculation. For timesheet, every time you will use this. The only thing which is going to change is that time calculation time. If it is overtime, then you will see overtime. If it is straight time, you will see straight time. If it is shift differential, you will see shift differential. For compensation, it is going to be the same. The only thing what is going to change is compensation element, and it changes depending on from which compensation plan we need to pull the dollar amount. Okay. That all comprises every single setup option on effective dated tab. So depending on what kind of earning we are configuring, we may use every single field on the screen, or we may use some selective fields on the screen. I hope whatever I covered is clear. Again, it's too much, so you need to, go through it. You need to read through at least twice or thrice, and then it will start, getting into your brain that based on requirement, what values or what information or what check boxes I need to check or uncheck. Now let's switch to non-effective dated. So non-effective dated, when I'm configuring earning, I need to pull the groups, and the groups are important. First and foremost is that I want this earning to go to gross. So I will use add to gross. add to gross, so that whatever a dollar amount is coming against this earning, that will become part of my gross wages. Then is it federal taxable? Yep, it is federal taxable. Then I need to include that into federal taxable wages, and pay component group for that is federal taxable withhold taxes. Similarly, for state taxable, I can search and I get that state withholding taxable. So I can include that. For local taxable withholding taxes, and then local taxable withholding taxes for employer. So now I include add to gross, add to federal taxable wages, add to state taxable wages, add to local taxable wages. Other than that, what is left? FICA. So I will add FICA taxable. What is left? FUI, federal unemployment taxable, state unemployment taxable, and then if it is happen to be supplemental, I need to mention supplemental earning standard. And if this is part of my disposable earning, when I'm calculating my garnishments, now I'm working on bonus, which means that bonus is not a periodic earning. Bonus is a lump sum earning which happens to be paid to employee either on a quarterly basis or on an annual basis. So altogether, I need to put all this pay component group at a bare minimum level. If my bonus is 401k eligible, then I need to include that into my retirement savings eligible wages. Because if employee is opting for 10% of eligible wages, then I need to group what all earnings are eligible for my 401k contribution. So in order to get that, I am setting up retirement savings eligible. So on every single earning, a bare minimum, you will see all this pay component group to be added if we are talking about US. If we are talking about Canada, then initial ones are EI taxable, equivalent of that is retirement saving is built on that. EI, then they called federal income tax, FI. CPP taxable. If this bonus is FLSA eligible, then I need to include FLSA wages. We can ignore France and UK for now. Ontario One Health, pensionable wages. If it is QPP for Quebec, I need to check a bit. But it should have provincial income tax and federal income tax if we are talking about Canada. So we need to include all this pay component group in order to get the correct taxable wages, in order to get correct disposable earning, and in order to get correct retirement or pensionable wages. If we want to map any benefit plan, then we can map benefit plan here. If we want to give further, benefit coverage group, we have one more level down where we can select the benefit group coverage. But normally we mostly, as I said, 90% of time, we just map the benefit plan. Now this checkbox is very important and it is often used in interview as a question, that if my pay period is from 1 to 15 and my payment date is 22. Now between 15 to 22, employee got some life-changing event and that results into new election. Employee went ahead and they elected, like a birth of a new baby. So when they add their new baby, their premium increases. Now, when I am taking the premium into consideration, should I take the premium as of period end date or should I take the premium as of payment date? In this scenario, or in this example, what I just gave you, employee's premium is less as of 15th because baby was not born and not added. But as of 22, that is a payment date, baby born and baby is recorded in the system. So that causes employee's premium to go little higher as compared to what it was on 15th. So when I'm deducting in this pay period, should I deduct the premium before baby born or after baby born? Again, we ask this question to our customer, and if our customer says you need to take a coverage cost as of payment date, I will check this box. But if I don't check this box, then by default, the coverage cost, which is effective as of period end date, that is getting pulled up, and that is what we are taking deduction out of. So exactly same way the question is going to form. Your interviewer will throw this example and they will ask, if I want to pull the coverage cost as of payment date, where I can do the setup. Then you need to tell that there is a checkbox on earning side, you need to, or deduction side, you need to check that box, and that will take care of your election cost or cost of coverage as of payment date. Now costing. If I want to exclude this earning from forward accrual, I can check this box. But if I don't want, I can uncheck this box. Now, if there is no costing allocation mentioned at earning level, by default, the cost will go and post against your primary cost center or the cost center which is assigned to your primary position. But if I want that this cost is going to get posted against some specific cost center or some specific account code, what I can say, start date from this to end date. If I keep just a start date and I keep end date open, which means that after this start date, every single pay period, the cost allocation is going to happen to default organization assignment. No, I want this cost to be split between hard coded cost center, as 50% will go here and 50% will go to cost center 2000. So every employee who has this earning code on their check, their costing allocation is now hard coded to go into cost center 10,000 and 20,000. No matter what, employee is part of cost center 30,000. It doesn't matter because we put a override, and this override is earning wide override. This is not worker specific. This is earning specific. So as I said, most of the time we don't do that. But if there is any requirement, then this is a place where you can put the costing override on earnings. If override need to be done, then normally we do the override at worker level. Now I can quickly show you that how to do it because we are on this topic. So if I want Betty Lou to have a costing allocation to some cost center other than her home cost center, what I can do is I can go to her pay profile, and under her pay profile, there is a tab for costing allocation. And in this costing allocation, I can say that start from this date to end of this date, Betty Lou, if Betty Lou is having multiple position, I can pick her position, current, past, future. I can pick her current position, and I can say earning code is bonus. And then I can put, this is my default cost center. If I want to put this against something else, I can get rid of this default and I can add a new row, distribute 0 to this, and go to work tag, put the cost center 10,000 against 10,000. I want 50%, and against 20,000, I want remaining 50%. Now by doing so, there is a difference. When I'm doing on worker, this override is applicable to Betty only. But when I'm doing on earning, that distribution is applicable for every single worker who is getting that earning. Now, last piece is ROE, where we are defining that the earning code, which is coming, the allocation reporting period is last regular period or the period in which this earning is earned or the period in which this earning is paid. Similarly, the hours which are tied to this earning, they are getting getting posted against last regular period or period in which they worked or the period in which they got paid. Same is the case with retro, where we want to go put the retro hours and retro dollar, and my reporting type is any one of this. So I mean, based on option, how I want to do reporting, but I have never seen anything specific to reporting. Most of the time, the information what we need to pass on ROE is, because ROE is nothing but I mean maintaining a wage record for last 26 periods. That is for last 1 year. So for 1 year, we need to group the dollar and we need to group the hours. That these many hours work, these many dollars are paid. These many hours are worked, these many dollars are paid in the pay period. So it is very important that the earning we are reporting based on earned or based on paid. So again, if it is Canada payroll, then only we need to define ROE, else there is no need. If the earning is specific to US. Now, whatever information we are maintaining on non-effective dated tab, it stay for earning. It is not a effective dated version of it, which means that if I made a change, if I take out anything from here, and if retro happen, then it will take the effect for every single pay period which is getting recalculated in retro. Whereas the information what I'm going and maintaining on effective dated tab, that is the creating a snapshot of earnings definition by effective date. So if I'm making a new effective dated row as of 1/1/2021, then whatever, and if I'm calculating any pay period after that, then the pay period is going to take a definition based on the effective date 1/1/2021. It is not going to read the definition based on 1/1/200. But if there is any retro which is going back to 1/1/2021, then it will refer to information which is effective as of 1/1/2000, and then earning is getting calculated as per that definition of earning or that version of a formula. Does this make sense? I will take silence as golden. Okay, so this is how we configure our earnings definition. And again, as I said, we are going to configure few earnings. So we will see this particular, user interface or this earning definition at least 5 to 6 times in this class. So this is not first time or this is not last time you are seeing this. We will see this at least 6 to 7 times more. This slide is little off, but what are the deductions? At high level, when we group deductions, what deductions, how we can group the deduction? The first category is general deduction. And general deductions are nothing but the voluntary deductions. When I'm saying voluntary deductions it is workers, it is employees voluntary deduction that they want to volunteer. Some common examples are United Way. They want to contribute to charity. Subsidized services from subsidized services offered by company. If those kind of deductions are there, then they are general deduction because they are not the statutory deductions. Employee can skip those deduction if they don't want. Like contributing into retirement savings plan. If I want to contribute into 401k, I can, but it is not a obligation or it is not a mandated deduction that I have to have. Those type of deduction which are not compulsory or not a mandatory, I will call them as a general deduction. The second group of deduction is coming from the benefit plan. Whatever benefit elections I'm making, I need to pay premium for them. And those deductions, I group them as benefit deduction. When I'm saying benefit deduction, they are medical, dental, vision, life, supplemental life, short-term disability plan, long-term disability plan, life insurance. All these are, benefit elections. So we normally call them as benefit deductions because they are dependent on, benefit plan election, and based on their election, we get the amount to be deducted on check. Then position. If our worker, if our tenant support multi positions, then we need to enable that multi position on tenant level under edit tenant setup. And then when we are configuring our deduction, we need to capture the position work tag so that we will know that deductions are maintained at position level. So maybe at my primary position, I want to have two deductions, which are voluntary deductions. So whatever I'm earning on my primary position, if I made enough dollar amount, then only those two deduction will be deducted. But whatever I'm earning on my secondary position, those deduction will not get deducted if I don't have enough dollar on my primary position. I am enabled multi-position. And when I'm enabling multi-positions, I am basically treating that employees having a two jobs. And when employees having a two jobs, I am calculating individual check for individual job. So employee having two jobs, they end up getting two checks per pay period. And when they are getting two checks per period, I want to keep it very separate and very clean. I want to have earnings and deductions separate on check one, and there will be a separate earnings and deduction on check two. We cannot say that, okay, if enough money is not on check one, take the deduction from two. No, because then we are asking for trouble. System will get confused. System will not know that how to keep the house clean. So whenever you configure, the first question we should ask our customer is that, are you maintaining multiple position or concurrent position? If answer is yes, then we need to enable that multiple position setup at tenant level. And then we need to include position as a calculation work tag on every single earning, every single deduction, what we gonna configure. Because if by mistake you fail or you forgot to put the calculation work tag, this thing, and if you save this definition, then when you open this in edit mode, this calculation work tag doesn't come back for you to include. It is once or it is not. Then what will happen? You need to inactivate or delete this earning code and recreate the same earning code and then enable calculation work tag to support multiple position. I learned it very hard way. So that is why I'm sharing this experience. Always ask and clarify this multi-position thing in the beginning of the project or in the very first day of your design workshop. Because what happened with me, I configure close to 150 earnings. We did pay parallel, we did end-to-end, and we went into production. On very first payroll, we figure it out that employees having multiple position and they have a different hourly rate. And now what? My regular salary is all messed up because my regular salary is not, configured to account for multiple position and multiple rates. Every time, whatever hours are coming from time and attendance system, they were getting multiplied to the hourly rate, which was tied to their primary position. So my paycheck were way off. But now, that is something I need to fix it. So there is no way to get around it.
All right, let's test your knowledge. Here's a question for you. Which security group in Workday determines access to view employee pay data? Option A, payroll administrator. Option B, compensation partner. Option C, payroll partner. Option D, payroll processor. Take a moment to think, and when you're ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck.
What I end up doing is I run my earnings register for that pay period. And I saw that out of 150 earning I configure for this customer, how many earnings are resolving on this paycheck. I found that, okay, luckily out of 460, only 40 earnings are getting resolved in this paycheck. So I deactivate 40 I recreate 40 earnings code and then recalculate payroll. And then that is how we got it under control. So as I said, I learn in a hard way. So it is always good to clarify in beginning of the project to avoid any last minute hiccups. So this is how we group our deductions. Now next is, there are some of the fields which are very specific to earning and which are very specific to deduction. Now, before we go into this slide, we already did a walkthrough for earnings. We will do similar walkthrough. I will say deduction test. So first section is pretty much same. If I open side by side, we have name, we have code, we have payslip name, we have country, and we have comment. Same name, code, payslip, country, and comment. So first section or a general information is exactly same on earnings and deduction. Deduction is also having effective dated and non-effective dated tab. On effective dated, we have effective date, active inactive tab. We have criteria where we define our eligibility rules. Same structure, run category eligibility, pay group eligibility, and then we have a section for worker eligibility. We have scheduling where we say that, okay, the deduction will get come out only on first check of a month or second check of a month or a third check of a month. Then we have similar calculation, input allowed, override frequency. If deductions are getting prorated, again, same options, same setup. If we want to prorate the deduction based on event, same thing. Do we want to, now the difference is, in case of earning, we said do not recalculate on retro, which means that if we check this box, earning will be skipped from retro calculation. Here it says recalculated during retro. So if we keep it unchecked, then our deduction skip from retro calculation. So if I want my deduction to be considered as a during retro for recalculation, I need to check this box. This is one difference. Multi-state, same thing. Multi-position calculation work tag, same thing. Related calculation, same thing. This is a difference. Limit. So limit is available only on deduction. There is no limit on earning. Oh, sorry, there is a limit on earning as well. So same way, if we have a rule saying that in an year, you cannot earn more than $10,000 under this earning code, I can put that limit. I can say that the amount which can be earned maximum is 10,000. So I will create 10,000. I will put here, and then over what period? Over a calendar year. So I can pick the balance period as calendar year based on payment date. And then what pay component I want to include when I'm evaluating this limit of 10,000. Just one code, or it's a combination of earning. So if it is a combination of earning, I will put all those earnings into pay accumulator, and I will use that pay accumulator as a based on. But if it is just one earning, then I will keep it blank, and by default Workday will create a circular reference saying that what employee earned under this earning code over a period of 1 year. And if that number is less than 10,000, allow employee to earn. But if employee already earned 10,000 on this earning code in a given year, and that means limit has been met. So even though I have earning to be resolved, but because limit is met, system will, or the calculation engine will say limit is already achieved. Nothing will come out now. The same case on deduction. If we take an example of 401k, 401k limit is 19,500. If my contribution is already 19,500 for the year, which means that no further 401k contribution will come out on my check. So limit functionality is same on earning and same on deduction. So up till now, what difference we found? One is label on the retro calculation. If I go to non-effective date, again, I have a pay component groups. I have a benefit plan. On benefit plan, there is one difference. On earnings benefit plan, I have a coverage type also as an option.
So I have plan and I have coverage group. On deduction, I just have plan. Again, the checkbox is same, coverage cost as of payment date, costing allocation is same, and ROE is same. So earnings and deduction, pretty much they have same fields on each one of them. If I see, I mean, out of 100%, 80% of the fields are common in both of them. The fields which are uncommon or which are different between them are these. So when we are talking about earning specific, gross up is applicable only for earning. That is not for deduction. FLSA is specific to earning, not for deduction. The linkage between compensation plan and earning via compensation element is only available on earning. Pulling hours from time tracking only available for earning. Record of employment, I mean, this is by mistake, so just ignore. Record of employment, that is ROE. Both of them are having that. On deduction, recalculate during retro. We have an equivalent setup on earning, but the label is different. On earning, it is double negative. On deduction, it is straightforward. If you check, then it will consider. If you uncheck, it will not consider. And net pay arrear validation. So deduction will keep on checking that, do I have enough amount? I mean, you cannot bring your check into negative dollar. So net pay validation is there, which is very specific to earning. And similarly, if there is not enough amount on check, we want that untaken or undeducted amount to go in arrear, so that in next period, if employee having enough amount on check, the current deduction plus the arrear can be retrieved. So that feature is available on deduction, which is not on earning. So this is the one slide where we can see what are the difference between earnings or what additional configuration we have on earning, which is not on deduction, or what additional configuration we have on deduction, which is not on earning. Okay. We already spoke about all this when we go through field by field. Pay component group, we already speak what is pay component group. Criteria we covered. Calculation details we covered. Comp element we already covered in detail. Benefit plans we covered. Pay component security group. Now this is very new feature. Now what this feature is do? If I have 150 earnings and 150 deduction in a system, not every single earning and not every single deduction is applicable to every single employee. Now at a high level, I have a employee divided by their management level. So I have a management level from 1 to 10. What I say that earnings out of my 150 earning, there are 25 earnings which are applicable only to my management level, which are vice president and above that. And there are 10 deductions which are very specific to my vice president and above group. What that mean? That mean that first thing, whenever I want to show the visibility, the management, the employee below VP, they cannot see those 25 earnings and 10 deductions. How can I do that? Very simple. I need to create a segment, or I need to create a box in layman's language, which is applicable only for VP and above. So I got a box. In that box, I put those 25 earnings and I put those 10 deductions. In Workday terminology, we call that as a pay component security segment. Under that pay component security segment, I mentioned that, okay, these 25 earnings and these 10 deductions, they belongs to executive or VP and above segment. And all other earnings, they belongs to everyone. So if all other earnings are belongs to everyone, I don't want to put any security wrapper on it. But for this 25 plus 10, 35 code, I want to put a wrapper because I want only executives to see those earnings code and deductions code. So now I created a segment. I want to create one more security group, which identify VP and above. And because VP and above, they are management hierarchy. So I will create one security group, which is a job-based security group. So I will create this and I will name as segment 1 and I will include reg. Just for demonstration purpose, I'm doing it by type, go to earnings, and let's pick first 5. So I pick this 5 code and I'm saying that they are bundled in a box called segment 1. So now I have my segment ready. What I can do, I can go and I will say create seg group, create security group. And what kind of a security group I want? I want security group which is job based. And I can call this as VP and above. If I hit OK, it gives me option. Can I list job profiles? Can I list job category or a job family or a management level? I know it's a management level. So I go ahead and I say VP and above, they should get, they should get VP and above group. And what will be my organization level? I will say supervisory org and apply this to all the current organization and subordinate. When I create this security group will dynamically assign to every single employee who is having management level VP and above. So now I got security group, which is VP and above, and I got my segment. What I will do, I will go and I will create another security group, which is intersection of 2, or I will say create one, which is segmented security group. Where is my segmented security? And I will say segment a component, something. And when I go here, I will have that VP and above, and I will have my segment, what I created for pay component, that is segment 1. When I mention that, what this security group is doing, it is combining or it is creating an intersection of people who are VP and above, and then it is giving them access to the segment. It is giving access to the pay component, which are part of that segment 1. Now, everywhere where employee as self is having access, I will replace employee as a self with this new security group. What that mean? That means that employee will see only pay component or only see the earnings and deductions which are part of this segment, what I created. They will not be able to see any other pay component which is outside the segment. We need to understand. Here, security, I cannot create custom security. Like, I cannot create a security policy where I can define what role will see this page, on this page, what field they can have access. Because it's not customizable system. Workday give us a framework. The only thing what we can do is we can hide the code or we can unhide the code. But the page will come same for everyone. So if I'm saying that on payslip, I want to hide code which are specific to executives, or I want to hide a code while employees doing their voluntary deductions. So the user interface is going to be same, but what I'm trying to achieve is I'm trying to achieve access on earning code or a deduction code. And without segment, I cannot achieve that, because there is no way we can mention that, okay, on a code level, there is no way we are defining that, okay, this code is applicable to this level, or this code is applicable to this level, unless you build your eligibility rules like that, which is very exhaustive. And then, you end up creating so much of a tight boundary on those eligibility that sometime, if you want to process, you cannot process. Otherwise, the only possibility is you need to tweak the eligibility. So that is the reason, this segment is very powerful, and very useful. So I typically saw very strong use case for this in law firms. So in case of law firms, they have a payroll which is divided between staff and the partners. So the way law firm work is, you are staff, when they call staff, which means that employees, And when they got partner, means the people who are actually eligible to get profit sharing out of it. So they want to process their partners differently than their staff, because these partners are, first thing, they are making a lot of money and their taxation is totally different than your staff, because they are kind of a owner in that law firm. So there are different people who are responsible for running these people. So I mean, the team which is responsible for running staff payroll, they are separate from people who are running, partner payroll. And partner payroll, they don't want their codes to be visible to staff payroll. At the same time, staff payroll, they don't want their code to be visible to partner payroll. If that's the case, and I need to give payroll admin to both, because they need payroll admin access, because they are doing admin activity. Now, if I make them payroll admin, they end up seeing each other's code and they can step on each other's code. So with this segmentation, now I have an ability to box their own code into their respective segment and then do a segmented security with payroll admin role. So the payroll admin for staff, they can see just their code, whereas payroll admin for partner, they can see just their code. So again, it depends, like how teams are structured, how segregation of duties there. Based on that, we can determine that do we need a segmented security or not. But normally the payroll team is centralized. So in field, you will very rarely see that you need a segmented security. But other than that, if you're talking about pay accumulator and pay balance, you need to list them out one by one. Yep. So the way I don't remember functionality behind every single field. But my way of learning is, whenever I learn something new, I try to remember that where the functionality fields are there. Like, what functionalities are there? So when I try to, fit earning in my mind, I will say I have a eligibility. I have a ability to configure eligibility. I have a ability to configure calculation. I have a ability to configure proration. I have a ability to put compensation element, time calculation tag, limits. And then definitely I have pay component, benefit, and some stuff related to ROE. Now, I don't remember that for ROE what exact 4 fields are, but I know that there is some setup related to ROE is there. So when we are talking to customer or when we are hearing requirement, if they are talking anything about ROE, we know that, okay, there is something related to ROE on earning. I understand what they want. I will make a note of it. Then I will come back and I will try to translate or dissect their requirement into those fields by referring to documentation in order to correctly understanding that what is the behavior of that field or what is behavior of each one of the drop-down option they have under that field. So initially, this is very initially when it is new. When you configure 100 earning codes, some of them are by heart by that time. It is very easy that, okay, if book is there, I will score 100, but that is not possible. In 3 hours, you cannot, go through 1000-page book. You need to know that, okay, what are the chapters? If this question comes, okay, this question go back to this chapter, kind of a thing.
Hi everyone, I'm excited to give you a preview of ZaranTech's Expert Workday Payroll training course. In this intensive program, we'll explore Workday Payroll's key capabilities so you can optimize payroll processes and compliance. Whether you're new to Workday Payroll or an experienced user looking to expand your skills, this training delivers tremendous value. We'll cover the fundamentals: setting up payroll, managing pay groups, understanding calculation logic, and producing payroll reports. ZaranTech has trained hundreds of Workday payroll experts globally. Our real-world customer examples will empower you to streamline payroll operations and stay compliant. This is an outstanding opportunity to become a certified Workday payroll expert. Visit the link below for full information on ZaranTech's intensive Workday payroll training program. Thank you.